do with the Bitcoin besides it just gather value?
Real estate developers in New York City, they're not buying the real estate because they want to live in it.
But like most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. We call them poor. Okay? Right, like, the point is, if you have the superior asset, it's going up forever more. Forever.
Right, but we can all look Bitcoin sort of as
forever more. People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. 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 Okay.
Okay. All right. So, a couple things. One, I've got my MicroStrategy mug. I'm also wearing my MicroStrategy shirt, but people said I had to go full Chachi, so I cut off the sleeves. So we're here today. Let's do this, okay? We're going to make this happen now. Overall earnings, real quickly. So if we just look after the bell, you can see how a few have taken a hit. Amazon took a little bit of a hit. Airbnb took a little bit of a hit. I think Block took a hit. But one of the things not taking a hit is actually MicroStrategy, which you'll find in the bottom corner. If you look over there, it's actually up 0.89% after the bell. It did obviously drop heading into earnings. People were sketched, got a little scared. More broadly looking at earnings, before we start to get more specific into MicroStrategy, we have had a total before this afternoon, full Chachi. Yes, EC, I'm here for you, brother. We have had 57% of companies reporting. With this, we should be in the 60s. Overall, though, this number has been climbing. We have a 77% beating estimates. And out of those beating estimates, they're beating by a median of 6%. And out of those missing 23%, they're missing by -4%. So this is still looking good. It's been getting better, honestly. I've got the call sitting. We're waiting for that to go. We're ready to rock and roll. This is what things looked like before. And I've got to say, guys, Grok almost perfectly called earnings. Did a great job. With MicroStrategy, we do have new news. We're going to be looking at a bunch of things here in a little bit. Let me actually hop over here. Let's see. We're in here somewhere. Yeah, okay. Here we go. So we got MicroStrategy announcing BTC yield of 13.7%. I think the big things here is there was a gain of $5.8 billion year to date, doubles capital plan to $42 billion in equity and $42 billion in fixed income to purchase Bitcoin. So now we have an $84 billion plan to acquire Bitcoin between now and the end of the year. Insane. I'm glad, though, that we have these fixed income vehicles with Strike and Strife to be able to try and pull from that. And then we have MSTR and being able to pull from the equity too. I'm glad we're divvying it up. I think that's brilliant. I'm very excited about it. And again, we were down. So the top of the day, we were at about 400 plus, close to 404. At the bottom, we were at 375. I feel that volatility pumping. We have a lot to talk about I think that's the big headline, though, right? It's this right here. It's the $84 billion in additional issuance to purchase Bitcoin. The amount of Bitcoin we're going to get with $84 billion this year is an insane fucking number. I don't know if somebody wants to crunch the math real quick here. I got my BTC, yeah, right? My BTC MicroStrategy shirt with the sleeves cut off to show the guns out, right? Thanks for the stream, Jesse. Yeah, you guys are very welcome. And again, I love what we're seeing here. I love this kind of price action we've seen and where we've reached. I'm very excited to see what Michael Saylor is talking about in the call. The call starts in about 25 minutes. And if you guys want to look at some charts in the meantime, we'll do that as well, along with going through a bunch of MicroStrategy and Bitcoin related news. But I'm very excited. I'm hoping to hear something along the concept of synthetic halving. I would love to see Michael Saylor acknowledge that concept and talk about it today. That would be beautiful. The machine says, Jesse, thank you for doing MSTR earnings. It's been a while since you done a market close. Yeah, this is as close as it gets to a market close, right? I'm happy to be here. I don't do these things too much, but I can't pass up. For so long, I was skipping MicroStrategy earnings, and I missed out on just a massive amount of gains, not really understanding what was going on with MicroStrategy because I just wasn't spending enough time in it, even though I love Michael Saylor. So I've been making up for that the last few earnings calls. Raber says, what the fuck? I don't know, Raber. What the fuck? What's going on? What's going on? All right. But yeah, let's keep going. So again, $84 billion that we're looking to pull out of this bitch, which is amazing. Let me scroll down a little bit further. Actually, I'm not even in my bookmark. Let me get to my bookmark. That's where I want to be. So there's a few things I wanted to talk about. And we can get into the numbers and stuff. It doesn't really fucking matter. Nobody cares about. So real quickly here, let me just show you a few things. So subscription revenues have been climbing steadily since Q1 of 2020 at the start of the pandemic. It was 7.9 billion in revenues. Or I'm sorry, it says million in revenues. And then we went up to 32. So isn't that cute? That's a really nice number. And then again, product support services not doing too well, from 71 million down to 58. Does anybody give a shit? I don't fucking care. None of this really matters. Product licensing revenue has been dropping too. Nobody fucking cares. Everybody's here for the Bitcoins. Josh Mann fired shots at Saylor just then, calling the ATM too aggressive. Did he? Okay. Hey, you know what? I like Josh Mann. He's a good guy. We're actually going to look at some of his comments. I disagree with him, but that is perfectly okay. I like the aggressiveness. If he doesn't pull it all, great. But I think you might as well get it all out in front of you. I'm perfectly okay with that. So let's look here real quick. I did want to talk, speaking about Josh Mandel, I did want to talk about his tweet. And let me actually just go real quickly and see if I can see. You're getting bent. Saylor needs to sell more common stock, which he knows the shareholders won't like. Therefore, he disguises it in a 42-42 plan, despite having 20 billion of unsold preferred remaining from the previous plan. Why not issue it all? Anyone who knows basic accounting can see the grift so clearly. The answer is that he can't sell the preferred because it costs 10% interest and there's negative cash flow. Yeah, that's probably true. No, let's not. I wouldn't call it a Ponzi, though. I think that's bullshit. Which, of course, would be if he did. So to avoid a Ponzi, Saylor has no intention of selling 42 billion and more fixed income. I don't know that I agree with that. I don't know that I agree with that at all. I think as the price goes up, he's probably going to sell more of that. So I don't know if I agree with this take. Josh, why are you still a shareholder? Has Josh responded? So Josh retweeted this, but he didn't respond to it, did he? Let me see here. Nope. You have to understand that the future changes with one time traveler. Saylor gets selfish and greedy. Time travelers are supposed to be helping the world to get better at outcome, not helping themselves. Time travelers cannot just leap and leave behind a dead body or an NPC as the fall guy. Those time travelers will be caught in the future because there is a God. Wow. I don't even know what to say to that. I don't know what to say with that. Interesting. Does Saylor care about share price? Feels like he doesn't. He wants to acquire shit tons of Bitcoin. And he's made that very clear for a long time. And there's going to be dilution But I would personally, I think we're getting ready to rock it. I think 150K is short term. I think we get to at least 180 or 200 on the fucking low end of the spectrum with what I know about global liquidity and what I'm seeing from the setup of what the Trump administration's trying to do with Scott Bessent and the Treasury and the Fed and trying to force the Fed's hand at cutting at least 100 bips this year, if not more. I just see, and then China, I see the money printers having to go burr because if they don't just insanely inflate away their currency, they're screwed. And I don't think they can just devalue it to gold. I think it's going to automatically get devalued and balanced to Bitcoin. And I think we're about to see a massive launch. And I'm going to rarely do this, but I'm going to disagree with Josh Mann. I think that you want to be greedy right now with what we're seeing in front of us. And yeah, I have full faith in Michael Saylor. I'm actually excited to hear him talking. So I disagree with these guys. I don't think it's a fucking Ponzi scheme at all. I think he's being aggressive because the time is right to be aggressive. And let's just keep going. Let's keep going. So I did want to show this. Market to Maestro did a great job illustrating this. Again, just showing a cup and a handle and then showing the back test before you go higher. I saw this, you saw this, we saw it with Bitcoin, we saw it with MicroStrategy. MicroStrategy is just doing better. I don't know if I have it right in front of me here, but MicroStrategy is up about 60% in the time that Bitcoin is up about 22. So it's doing great. It's like 3x what we're seeing for the underlying asset, and I love that kind of stuff personally. This is what I'm looking for, and you know what I'm not seeing today? This is interesting. Jeff Park says, interesting how subdued MicroStrategy implied vol remains relative to November melt-up, given streak and spot 400. So again, not crazy volatile, but starting to ramp up. The engine is starting to move. I'm very, very excited about it. And I think good things are coming. We got 20 minutes till the bell, guys. That's when we start listening to the Sailor. Let me see if I can get caught up with comments. You guys are moving pretty quick today. Orange Fitness, baby. Orange, green on top. C-list, Saylor needs to be careful about hyping. He doesn't want to have a ton of class action lawsuits. I'm not worried about it. Raber Trades, thanks. I felt like Josh would lead to a constructive conversation. Yeah. No, it's interesting that he made these comments. And we're probably just looking at this from a completely different foundation. And I can't speak for him. I did actually say in another post, though, that there's a couple people I would love to interview in the future if I did interviews. I would love to do Michael Howell with Cross Border Capital. I would love to do Michael Saylor because it seems like he'll go on with anyone, and I'm here for it. And then also I would like to interview Josh Mandel. So maybe we'll get an opportunity. And he liked that post, and he follows me too. So maybe we'll get an opportunity where we can hear his side of the story and why he feels that way. Because, again, he's being kind of cryptic in the response. He's retweeting somebody else, calling it a Ponzi scheme, and then he's kind of being cryptic and saying, don't be too greedy, yada, yada. But I'd be very curious to flesh it out and get a better idea of where he's coming from and why he feels the way he does. Let's see what people like Jeff Walton think. I actually love this. The last post I saw from Jeff before these were out, and we'll look at him in a second. It says, if Q2 were to end today with Bitcoin at 96,600, which is actually at 96,721, so far this is true. He said, would post a $7.5 billion single quarter gain. This would qualify MicroStrategy for the S&P 500. Good thing there's 60 days left in the quarter. So what he's saying is this is about to get fucking sick. If Bitcoin runs to 150 between now and the end of Q2, which I think it's very capable of doing, you're going to see some crazy fucking gains for MicroStrategy in Q2. I 100% agree with that. Again, Grok wasn't too far off. Grok summarized that he said Q1 of 2025 earnings under the new FASB rules will likely show a significant loss of $5 to $6 billion. Fell within that due to a decline in Bitcoin prices with an EPS around negative 20 to 25. However, they also report 12.75 billion increase to retained earnings at the start of the quarter, reflecting the fair value adjustment. So basically saying, hey, investors will have to see what they want to focus on most, the past or the future. And again, I in my post, I think I said something along the lines of, we'll see what happens with an additional ATM offering and how people take it. And so far, it looks like some of the diehards aren't taking it very well. So let's look at Jeff Walton and see what he has to say, since he's one of True North. And let's see here. Is he doing a call right now? Is he? Nope, that's old. Balance sheet on some creatine. All but $5 billion of strategy bonds deep in the money equity. Microsoft pro forma leverage ratio is 12.5, including preferred stock. MicroStrategy is currently the strongest balance sheet on the planet, and it's about to get way stronger. I agree. I think that's the right take. You only get one. You're the only, you only get one crack at this accumulation phase. Yes, exactly. I agree with that. Fuck yeah. I'm liking the way you're seeing this, brother. I'm liking the way you're seeing this, Jeff. What about our buddy Ben Workman? What is Ben Workman thinking about this? We should go back and see. Let's see. I think I follow him, and I think he follows me. Maybe still. I don't know. Yeah, he follows me. All right. Wow, he's went up a lot. 42,400. Congrats, Ben. I think he's got a new job. Is he working for Swan or somebody else? Let me see. Does it say it in here? I don't know. Yeah, Swan. Okay, cool. Congrats, brother. That's good stuff. I like this MicroStrategy post. We'll probably look at that in a second, too. Let's chat MSTR. Oh, so he hasn't posted anything. He's quiet. He's on stealth mode. Jeff is going all out, but he's on stealth mode. I do like this post. This was Michael Saylor saying, by the time financial advisors say it's okay to buy Bitcoin, it'll cost $1 million. When they say it's a good idea, it'll be $10 million. And I 100% agree with that. If you look at exposure prohibited across all these old legacy major banking systems, you'll see that Vanguard, Edward Jones, Raymond James, Citi, T. Rowe Price, Neuberger, Berman, Creative Planning, Northwestern Mutual, and Edelman Financial Engines, I don't know what engine they're talking about, the Model T maybe, are all prohibiting exposure to Bitcoin. And then exposure restrictions, Morgan Stanley, Bank of America, JP Morgan, Goldman Sachs, UBS. It's just like, it's a huge list. And then exposure unrestricted, it's a handful. It's Charles Schwab, Fidelity, Wells Fargo. I've got an account with them. I'm probably going to keep it just for that one reason. T. Rowe Price, and then Fisherman Investments, or Fisher Investments. So again, this is just kind of crazy. Oh, let me adjust my image down in the bottom too, so you can still see it. So still sitting pretty good. We're sitting at kind of recent peak volumes going back over the last week. So this isn't a bad place to sit and just kind of grind. We'll see if it changes anytime soon here. If we bounce higher, it's all going to be dependent upon what Michael Saylor says in about 13 minutes. And I've done a shitty job looking at chat. Jesse, Riot earnings, WYT, recent loss, Jesse. Yeah, let me see. I haven't even looked at Riot, man. Honestly, I haven't even taken a look. Let me pop it up real quickly here. And yeah, I used to love Riot. I made a lot of money off of Riot. When they were initially built out, I did really well with them. They're down 0.64%. They had a 7.32% gain day. Miners did really well today, guys. We've got CleanSpark up 6.12, Mara up 5.09, Iron up 4.26, Riot up 7.32. They all did really well. What hodl, real BTC or MSTR stock? All right, let me get caught up with comments because I'm probably missing a shit ton of stuff. Saylor had troubles at circa 2001. Yeah, he's the only CEO still around from that time frame from the dot-com bubble. So I think the fact that he exists is pretty amazing. Tyler Casamente, what was the cause for the indexes to drop drastically right below the close or right before the close? I don't know. They've done so well. Again, I just want to point this out. I want to show you the Nasdaq real quick, and then we'll get back over to our boy Michael Saylor and everything that's going on. But this is fucking beautiful. I don't know what to say to this. This is the best monthly candle in ages. I think I have it over here. Let me find it real quick. I've got like the details of why this is so cool over here somewhere. Let me just see. Yeah, is it right here? Yeah, look at this. This is crazy. So the Nasdaq it's higher than this now. I said it had its highest volume monthly close ever, and the second highest percentage candle bounce in 25 years. So again, volume candle over here, higher than it's ever been on the Nasdaq. And then if you look over here, the highest percentage bounce we've seen on the monthly time frame going back almost 25 years, which is insane. And it's a beautiful thing. And we should be very excited about these kind of moves. This is nothing to be concerned about whatsoever. And again, just look at that. Look at that right here. We're still above the first fib line. And if we zoom in closer here, were like around peak volumes on this lower time frame. And by lower time frame, I mean like 2023, 2024, and 2025. Look at that line for volume right there, which perfectly coincides with the first fib extension. The Nasdaq is fucking beautiful. It's just consolidating a little bit. Don't be worried about any downside price action that you've seen recently on the markets. They look great. Very excited on how good they look. All right. So yeah. So again, I like this. I think this is right. And let me go back over here real quickly. I'm actually going to go back into my MicroStrategy folder, and we're going to look at some stuff. So again, 21 billion ATM. Some people don't like what's happening. I'm okay with it. I actually think you should be aggressive right here. Oh, I did want to talk about this. This is another post from Josh Mandel that I do agree with. So somebody asked here, what ends this nonsense with the miners and like, Clean Spark? It says, if these guys don't have to cover, the stock can't move up. Do any of you think these shorts are ever going to cover over the next 4 months? And I said they're covering in the months ahead. And I actually tied this with Josh Mandel's tweet about MicroStrategy. I said, check out the top portion of Josh Mandel's tweet. I'll show that in a second. It says, we're seeing a 3-to-1 ratio for MicroStrategy performance versus Bitcoin right now. And so I said it's coming. We're getting ready to just wipe these fuckers out. And I also said that I agree with Josh with his comments about needing to hold the line on the 100% NAV when the cycle is over. If we don't have a 1-to-1 ratio, that would suck. And you could see something like GBTC where it was like 54% to NAV, and you don't want to see that. You don't want to see it to where you have a way more Bitcoin. You want to try and make sure that you're balancing that out. That was one of the benefits of GBTC as an ETF. When it was an OTC, an over-the-counter trade, it had that problem, right? And so we want to try and avoid that problem with MicroStrategy. So I actually really do agree with this previous post from Josh Mandel. And you could read this on your own, but he basically says, he says that and a little bit more, talking about volatility and just, all these things. But I agree with him. I think he's 100% right. It was a really good, thoughtful post. I'm not sure. He's probably not as aggressive as an investor as I am. Josh has been around though. I mean, he's a pro, dude. He was back in the 90s. Look at this, 90s to 98. He was with Salomon Brothers. I'm a high school dropout. He was with Salomon Brothers. Bond portfolio analyst, government desk, long bond trader, derivatives, short-dated options trading, head at Caxton Associate Hedge Fund. This guy is pretty badass. I've got a lot of respect for him. So I won't shit talk him on the way he feels about MSTR right now, but he's probably just a lot more conservative than I am. And judging by his age and the fact that he was, here in between 90 and 98, he's probably right to be more conservative than me. He probably is. That's what I would be doing. I mean, shit, I'll probably be there in like another 5 years the way I'm going. I tell you this, if I get to $15 to $30 million this year, I will dial back my aggressiveness. I still am going to be an asymmetric investor. I still want huge fucking returns just because I want to be better than everybody else that's come before me. But I'll definitely dial it back. I'll have some portions of my portfolio that are a lot more conservative. And that give me great hedges. Christina Curley, Jesse, did you see the Apple buyback just announced? No, what was it? Throw it in chat. Let us know. Needs 55. Afternoon, Jesse. Love the Suns out, guns out. Thank you, brother. We got about 7.5 minutes, guys, until the bell. Also, I just wanted to point this out. So when you're looking at Strike and Strive, just look over here, guys. Look at the convertible bond market is right over here, right? And so you got Strike over here, and then you got Strive targets the broader fixed income market. So between these two, you're looking at $300 trillion. When you compare that to the current $2 trillion size of Bitcoin, $16 trillion of gold, $18 trillion of art, $6 trillion of collectibles, $115 trillion in equities, which are arguably overpriced, real estate, which is definitely overpriced everywhere, and then the $120 trillion money supply. And I don't even think we're quantifying derivatives well within this image, but there's a lot of stuff that holds value, and all of it can go into Bitcoin. All of it. At least until it finds a natural equilibrium. And that's the beautiful thing about Bitcoin. Imagine real estate that's affordable again. I think we're getting ready to see in the years ahead real estate prices coming down consistently to where people can afford to buy fucking houses again. partially in the United States because of a new abundance approach of building and pulling in energy and doing all the things that you should do, but also because Bitcoin as a vehicle will take away from the gold markets, the equity markets, the money supply markets, the real estate markets, the bond markets, and collectibles. It will eat all of them up and make them more affordable and reasonable in pricing. And that is a beautiful fucking thing for the future of humanity. So I love that chart. That's one of my favorite, or this image is one of my favorite visual references for what Bitcoin can do to help the world. It just gets me fucking excited. I'm not going to lie. Also, I want to say a few things that I really like about this company, Bast. Okay. One, I love the fact that they have an interface that gives you data points right away, whether it be MSTR, whether it be Strike or Strife or BTC, or their debt obligations and what the terms are, or their assets or their options, all their charting data, their history, their purchases, their shit. I love all of this. I love a company that gives this kind of, and now they're talking about making it to where you'll be able to see, what their holdings are in a more clear on-chain way without giving away too much. And I love that. I love this kind of visibility and clarity. If you're going to be a bank, you got to have this kind of stuff. Yeah, 5 minutes, less than 5 minutes, guys, and we'll be rocking and rolling. Once the sound starts playing, we'll cut over here and start listening to my man, Michael Saylor, who someday I would hope to interview because I got a lot of questions for him. And frankly, I just want to talk to him and tell him thank you. Just like Satoshi Nakamoto, just like Elon Musk, just like great people doing wonderful things for us and for tomorrow. And I just want to say thank you to him. If you think about it, and then if we go into a bear market, I'm probably going to own some other vehicles that will hopefully treat me well with a nice hedge on MicroStrategy, because it could get totally fucked in the bear. I don't know. But I love this man, and I love what he's doing, and I love the fact that he's pulling people in to the Bitcoin ecosystem, and I'm grateful for it. Bit bonds, oh my God, man. Don't get me started on bit bonds. That'll be a whole rant, and we don't have enough time for it. I love the idea of tying in treasuries with 10% Bitcoin issuance, where the more you issue the money, the more it goes into Bitcoin. I actually think all of our bonds should be bit bonds going forward. Personally, I don't know, that might be too radical of an idea for the administration right now, but I do think we're getting bit bonds. I think it's almost a guarantee. I just don't know the volume. I think they would start slow, just to call it an experiment, and then maybe they would increase as deemed needed. But Frog Dog 30, do MSTR earnings even matter? I'm in MSTU, but no, the earnings don't really matter much. It's all about what they're doing with their Bitcoin purchases and what the outcome is going to be with the stock price. The earnings are just noise. Mike says, I'm wondering more and more if there will be another BTC bear. Here's the thing, man. The halving is over. And I mean, it's not over. We're going to have another one, right? 3 years from now, like clockwork, we're going to have another one. But for all intents and purposes, I would say the halving is over. It doesn't matter because the amount of issuance, there's so much supply that sits out there now that the amount of issuance doesn't really matter as much as the existing supply and what people are doing with it. And if you have this synthetic Bitcoin purchases that Michael Saylor is doing with strategy, and who knows, man, maybe the administration told him to do this. They're like, go balls deep. I have no idea. I wasn't there at the crypto summit sitting at the main table with Trump not too far away from me, okay? I don't know, but I know I love what I'm hearing from Fred Thiel. I love what I'm hearing from Matt Schultz. I love what I'm hearing from Michael Saylor. And in about 2 minutes here, I'm hoping to hear more from Michael. Very excited. And his president and CFO are great too. They should be fun. Let's go. I love the cutoff. Thanks, man. I literally cut it off for this because somebody told me to go full Chachi, and so I like to commit. Let's see. Dilution of fiat into Bitcoin is accretive long. Yeah, exactly, Alex. If you're going to dilute and then buy Bitcoin, when I think that Bitcoin right now is probably at the level of what, if there is a bear, what it will be. So if the worst thing we do is round trip and drop 55%, maybe even 60%, because we went up too much, because we went up to that 444,000 that Josh Mandel was talking about. If we round trip back down and got into like the high 60% drop for the bear, I'd be okay with that. Honestly, I don't even think it'll happen though, because I think there's going to be too much buying pressure. Jesse, can you block that restream spam, or am I the only one seeing it? I don't see spam. All I see are the comments. Oh, you mean like the I've reached 100 messages today with Restream Chat? No, I think they embed that in there. Maybe there's a way to turn it off. I've never looked. So I don't know 100%. All right, let me see here. So we got about 800 people. I think everybody's in the other big earnings calls because, again, there are some big earnings calls today. And I might just jump over to that real quick before the call kicks off. We got Apple, Airbnb, and Amazon, Mercado Libre, Riot, MicroStrategy, Lilly, MasterCard, McDonald's. There's just a lot of stuff going on from an earnings side of the fence. There's a lot happening today. All right, let's just hop over here. There's probably other stuff we could cover, but I'm just going to wait right now. We got this coming on in a second. Macro Polo said Apple announced a $100 billion stock buyback program and double earnings beat. Wow, $100 billion. I would have bought Bitcoin. I mean, don't get me wrong. I would have bought Bitcoin. I would have bought Bitcoin with some of that. Why wouldn't you at least add like a 2% or 3% allocation to Bitcoin? I got to say, I'm a little disappointed. I mean, again, this will prop up their stock, and this helps the Magnificent Seven, and it's going to help the entire S&P and a lot of other indices, right? When you're pulling this up, you kind of force buying. So I like that part of it, I guess. But I would have gotten some Bitcoin, man. $100 billion for real? I remember when Apple earnings were delicious 13 years ago. Oh, yeah, dude. Back in the day, I would have loved to have been invested in Apple. I was just a pothead. I had no interest in any of that stuff way back in the day. I remember when the Apple iPhone came out, I knew I should be back in investing in my heart and soul, but I was still damaged from the dot-com bubble and then again in 2008. Jesse, open market team going to bed looking for group. Without BTC, Apple will be short-term gains. Yeah, I don't love doing that kind of buyback. Let's see here. Schedule it for waiting for host to start the webinar. So we're at 4:01. I'm going to refresh just in case it's weird. I don't want to miss anything. Oh, maybe.
Moderator for
There we
Strategies.
go. There we go. Here we go.
2025 first quarter earnings webinar. Before we proceed, I will read the safe harbor statement. Some of the information we provide during today's call regarding our future expectations, plans, and prospects may constitute forward-looking statements. Actual results may differ materially from these forward-looking statements due to various important factors, including the risk factors discussed in our most recent 10-Q filed with the SEC and our 8-K filed on April 7th, 2025. We assume no obligation to update these forward-looking statements, which speak only as of today. Also, during today's call, we will refer to certain non-GAAP financial measures. Reconciliations showing GAAP versus non-GAAP results are available in our earnings release and presentation, which were issued today and are available on our website.
This is the
at
boring part.
strategy.com.
It'll get better.
I would now like to welcome you all to today's webinar and let you know that we will be taking questions using the Q&A feature at the bottom of the screen. And you can submit your questions throughout the webinar, and Michael, Fong, or Andrew will answer the questions.
If you guys have questions, throw them out and I'll throw them in here.
Please be sure to provide your name and company's name when submitting your questions. I'll now walk you through the agenda for today's call. First, Fong Lee will cover the business highlights for the first quarter of 2025. Second, Andrew Kang will cover the financial results for the first quarter of 2025. And then Michael Saylor will provide an in-depth strategic review of our Bitcoin Treasury strategy. And lastly, we will open it up to Q&A.
Here, one sec, guys. I'm going to try something.
With that, now I'm
going to try something real quick. Just give me a second. I just want to see. Why am I not getting sound on this one now? There we go.
Thank you, Sharish.
We're going to do it
Hello,
from here.
everyone. I'd like to welcome all of you to today's webinar. With just a few days to go, I'm excited to invite you all to Strategy World 2025. Next week, May 5th through 8th in Orlando, Florida. Sharish, you may want to thank you. Come meet our software customers, partners, and employees, explore our innovations in AI and BI, and engage with global corporate and thought leaders shaping the future of Bitcoin for corporations. You can visit our website to register.
Yeah, this is the most boring.
And I look forward to seeing many of you in Orlando.
Yeah, this stuff is pretty like bleh. It's really when you get Saylor on there and then you get him asking questions. That's the fun part. But they do a good job illustrating a lot.
Now holding 553,555 Bitcoins with a total Bitcoin market value of $52 billion as of April 28th. In the first 4 months of 2025, we acquired an additional 106,085 Bitcoin for a total purchase cost of $9.9 billion, an average price of approximately $93,600.
Largest corporate holder in the
Q1
world.
2025, Bitcoin's momentum accelerated meaningfully, driven by a series of landmark government actions. Most notably, the Trump administration announced the establishment of a strategic Bitcoin reserve. This bold move marked the first time a sovereign government publicly recognized Bitcoin as a national reserve asset. In parallel, the administration's broader pro-Bitcoin regulatory stance has further legitimized the asset class and attracted heightened institutional interest, setting the stage for deeper integration of Bitcoin into the U.S. financial system. On the capital markets front, we have also made significant progress. In the first quarter of 2025 and quarter to date in Q2 2025, we raised $6.6 billion net proceeds through our at-the-market or ATM equity offering program and raised $2 billion through the issuance of a convertible note offering. We also raised $1.4 billion through our newly listed preferred stock, Strike and Strife. We expect to continue issuing innovative fixed income securities and seek to enable our common stock to outperform Bitcoin via intelligent leverage. Strategy has added to its balance sheet in every single quarter since August 2020, across 60 plus announcements, and 100% of our Bitcoin holdings remain fully unencumbered, demonstrating our long-term conviction and unmatched consistency in executing our Bitcoin strategy. This makes us the most committed corporate holder of Bitcoin globally, representing 2.6% of all Bitcoin in existence. As the chart shows, our pace of accumulation accelerated meaningfully over the past 2 quarters, reflecting both market opportunity and strong Treasury operations execution. As the world's first and largest Bitcoin Treasury company, we remain hyper-focused on capital markets innovation and our Bitcoin operations to strategically accumulate more Bitcoin. We've now utilized $37.3 billion of capital to increase our Bitcoin holdings and drive shareholder value. That capital was acquired through 3 primary mechanisms. First, $10.6 billion of debt issuances, of which $8.2 billion in aggregate principal is outstanding. The second, $1.4 billion in perpetual preferred equity through Strike and Strife, reflecting investor demand for both yield and Bitcoin-linked instruments. Third, $25.9 billion of Class A common stock issuances. And fourth, $836 million of cash flows from software operations. As we reflected in this quarter's capital markets activity, 2025 continues the momentum we built in late 2024, with $10 billion already raised year to date through a diversified mix of securities. This included $6.6 billion in equity and $3.4 billion in fixed income.
I'm actually happy that year to date, we're actually seeing less equity dilution. That's what I think people should focus on.
Ability to tap multiple capital sources efficiently and strategically. Q1 demonstrated that the $18.1 billion raised in Q4 wasn't a one-off. We're operating at a new baseline. Rather, it represents the foundation of our evolving and scalable capital strategy. In terms of the largest treasuries in the world, we've gone from virtually negligible to now the 13th largest in Treasury compared to the S&P 500 universe, entirely through our Bitcoin holdings. And we're growing fast. Over the next 2 to 4 years, we believe we have the potential to surpass many of the companies ahead of us on this list, continuing to scale our Bitcoin treasury with conviction and discipline. 5 years ago, when we embarked on the Bitcoin journey, we were the only corporation with the courage and conviction to do so. Today, there are over 70 publicly listed companies globally holding over 700,000 Bitcoin who are adopting our playbook. There are newer corporate entrants adopting Bitcoin, and some are recurring Bitcoin stackers like us. We welcome all corporates to Bitcoin and are extremely proud to see Bitcoin treasury companies emerging in the US, Japan, India, France, and other countries. We believe our unique attributes and track record of transparent investor relations, conviction in our Bitcoin strategy, innovative offerings, high volatility, combined with the scale of our Bitcoin holdings, will continue to differentiate us. Since we adopted our Bitcoin strategy in 2020, MicroStrategy stock has outperformed every major asset class and every S&P 500 company, appreciating 2,887% to date. To put that in perspective, Bitcoin itself is up 692%. The S&P 500 has risen just 65% over the same period.
Insane.
And while NVIDIA has been the top performing S&P 500 stock during this period with an 874% gain, we've outperformed NVIDIA by more than 3x. It's not even close. If you look at the last 12 months, we've similarly outperformed all the largest companies, as well as all the key indices. And if you look at the last 3 months, when the broader macro markets witnessed the most volatility since 2020, we still managed to outperform the Magnificent Seven and key indices. Our performance metrics speak to the uniqueness and strength of our position in the market. Since launching our Bitcoin strategy, MicroStrategy MSTR has not only outperformed Bitcoin itself, but every stock in the S&P 500. That kind of return doesn't happen by accident. It's the result of strategic focus, intelligent leverage, and our disciplined execution. We're also one of the most heavily traded and closely watched equities in the market today, both in spot and in options markets. MSTR consistently ranks among the top across open interest, daily trading volume as a percentage of market cap. This level of engagement reflects more than just price action. It's a sign of growing institutional interest, retail participation, and the market's recognition of strategy as the capital markets center of gravity for Bitcoin.
Wow. Wow.
Now, I'll turn to our capital plan. In October of last year, we introduced the 21-21 plan, a bold but disciplined framework to raise $21 billion in equity and $21 billion in fixed income capital. We designed it to be agile, scalable, and responsive to market dynamics. Since then, we've reported having raised $20.9 billion in equity and $6.4 billion in fixed income capital, meaning we're 65% complete. Notably, 99% of the equity portion has been completed in a mere 6 months. We believe the accelerated progress is a testament to the strength of our market access and the credibility we've built with all groups of investors who've demonstrated increasing demand for our securities. So what's next? Remember our original inspiration from the Hitchhiker's Guide.
I was kind of hoping he would explain why he was behind.
Ultimate question of life
on fixed income.
Verse and everything. The number was 42 for our $42 billion capital plan. And given our success, we're now going to double down with a new plan.
It's fucking
insane. The 42 capital plan. That's $42 billion in equity and $42 billion in fixed income, targeted through the end of 2027 and inclusive of our original $21 billion capital plan. This gives us the scale to pursue our strategy with conviction and the flexibility to continue to adapt across market cycles. So to that end, we're pleased to announce that today we've filed for a new $21 billion ATM program. Later in the presentation, Michael will share with you a framework for how we think about our securities and credit risk as it pertains to our Bitcoin strategy, including illustrative examples of how this framework would apply to the different types of securities we've offered, MSTR, our convertible bonds, Strike and Strife, And we're excited about this opportunity to discuss the framework, which we believe is helpful for understanding our capital financing decisions. Under the new 4242 plan, we're 32% complete. That leaves us with around $57 billion of additional capital to be raised through the
I see. So okay, so that makes sense. So this is a part, so it's not just a total fresh amount. This is cumulative. So 84 cumulative, including what they've already done. Okay.
end of 2027. As we move forward, we'll focus more on the fixed income side of our plan through instruments like strike, strife, convertible notes, and potentially new structures we may explore over time. At the same time, we'll continue to utilize the equity ATM when conditions are favorable and when it represents an accretive and efficient option for our.
I would assume that they'd wait longer, like into the bear for the convertible bond offerings. I would assume that's when you, like, once you think you're getting out of the bear, then it's like, fuck it, pay the dividends. The stock is gonna go up. It doesn't really matter. I don't know, or some combination.
To responsibly scale while maximizing long-term value. We intend to remain highly efficient with our use of our overall capital. We have $185 million of total fixed annual obligations for interest and dividends, which we can cover using a fraction of our daily trading volume as new stock issuances. To put in perspective, our ATM activity this year alone has raised $6.6 billion, and our obligations represent just 3% of the daily traded volume of our equity, and less than 1% of the total equity we've raised in the last 12 months. As a result, we're comfortable raising additional fixed income capital to buy more Bitcoin without being restricted by available cash or cash flow from our software operations to service all of our interest and dividend obligations. Mike will explain later why this strategy is highly accretive to our shareholders. We're tracking well ahead of our KPI targets for 2025. Year to date, we've achieved a 13.7% BTC yield, putting us well on pace to reach our full year target of 15%. BTC yield reflects the Bitcoin gain we've generated through our Treasury operations. Our BTC gain is approximately 61,500 BTC year to date, representing a BTC dollar gain of $5.8 billion at the current Bitcoin price. Given our strong year-to-date performance in the favorable market environment, we're raising our KPI targets for 2025. Jesus. We've raised our BTC yield target from 15% to 25%, reflecting confidence in our ability to create value for our shareholders. And at the same time, we're increasing our BTC dollar gain target from $10 billion to $15 billion. These new targets better reflect the scale of our strategy and the value we believe we can unlock through disciplined Bitcoin acquisitions. We remain disciplined in the use of both the ATM and other capital raising sources, doing so in a way to achieve our BTC yield and BTC dollar gain targets. I'm now going to turn the call over to Andrew, who will discuss our financials for the quarter in further detail.
Thank you, Phong. I will begin with a quick review of the software results, then go into more detail.
Here's the boring
Bitcoin
part.
Results. In Q1, total software revenues were approximately $111 million, down 3.
All right, I really don't care about this part. I'll leave it down a little bit. What are you guys thinking so far? I don't know. I'm pretty excited about these offerings. I think the way they're targeting this is probably really good. I'm not worried about risk. We can look when we're done here. We can look at other things that show where they're sitting with their debt obligations, and I just don't see any problems at all.
And now make up approximately 33% of.
But what do you guys think? Throw it out in chat.
Continuing our quarter-over-quarter double-digit growth. Our subscription bill.
They're going to consume everything. Everything
in Q1 to $24.5 million. The decline in product license revenues and support revenues continue to be offset by growth in cloud, and we continue to see growth in demand from our cloud platform and anticipate this trend to continue and strengthen in the coming quarters. Lastly, cost of revenues were $34 million, up 13% compared to Q1 of last year. The increase was driven primarily by higher cloud hosting costs, which we expect to continue in future periods as a direct result of our growth in cloud. Moving on to Bitcoin. We adopted fair value accounting for our Bitcoin holdings on January 1st this year, which has fundamentally changed how we value our Bitcoin treasury asset. To the left of this slide, we began the year with our Bitcoin holdings valued just under $42 billion. On Jan 1, upon adoption of the new rule, we recognized $17.9 billion to our beginning balance of retained earnings,
Crazy.
which was the difference between the carrying value on our books and the fair value based on Bitcoin price as of 12/31. One fundamental difference now under fair value accounting is that our holdings are marked on the last day of every quarter, not throughout the quarter as before. Any new Bitcoin purchased during the quarter are initially held at the purchase price of those Bitcoins, and all prior quarter and new quarter purchases are fair valued as of the last day of each quarter. In Q1, the price of Bitcoin declined from approximately $93,400 at the end of the year to roughly $82,400 at the end of Q1, resulting in a $4.9 billion unrealized fair value loss on our pre-Q1 holdings. We also purchased throughout the course of Q1 an additional 80,715 Bitcoin at an average price of approximately $94,900, representing $7.7 billion of new purchases.
It gets a lot better when Saylor comes on. Trust me.
The price of Bitcoin was approximately $82,400. These new purchases also reflected a fair value decline of about $1 billion. As a result, our overall Q1 unrealized fair market value loss was
I think it's important to remember that $42 billion plus the amount that they haven't even completed yet in convertibles is by the end of 2027, I think, right?
The current quarter. This waterfall chart begins with our March 31st Bitcoin holdings on the left, valued at $43.5 billion. Since 3/31, we have seen a substantial recovery in Bitcoin price, which has increased since the end of Q1. Using a Bitcoin price of $95,000 as an example, the change in Bitcoin price would reflect an illustrative $6.6 billion unrealized fair value gain.
Please, guys, no fapping on here when I'm doing these, please, to God.
So far, we have purchased an additional 25,370 Bitcoin at an average price of $89,303.
That's awesome.
Which represents a $2.3 billion investment. At the example price, the new Q2 purchases would reflect an increase of roughly $100 million in fair market value.
Look at that increase.
In this illustration,
since
our
March.
unrealized fair market value gain would be approximately $6.7 billion. And the market value of our total Bitcoin held today would reflect a fair value of approximately $52.6 billion. As Fong mentioned, Q1 was a milestone quarter for us with the IPOs of two new innovative preferred equity offerings. Strike,
it will be
our
insane.
8% convertible preferred, is trading with an effective yield of roughly 9%. Since launch, Strike has delivered a 8.4% price return, outperforming the median return of all prefs offered since 2015. Strike is trading with an average daily volume of roughly $33 million, which is nearly 80 times the typical pref trading volumes, demonstrating strong institutional demand and a deepening market for this product, which is strengthened through a $21 billion ATM, institutional block trades, and follow-on retail demand. Strike, our 10% fixed coupon perpetual preferred, has shown even stronger liquidity and investor demand and has quickly emerged as a top-tier preferred instrument. With a price return of 7.5% since issuance, it has meaningfully outpaced the broader preferred market as well. Average daily volume for Strike has been $26 million, again, significantly higher than the peer set. When you compare the strong BTC risk and BTC credit profiles of these prefs, there is tremendous unlock through the eventual recognition of the underlying BTC support of these instruments and the potential changes in the rate environment in the future. Both Strike and Stripe stand out as one of the most liquid and high-performing preferred stocks issued in the last decade.
Crazy.
They serve to provide innovative securities to institutional investors, insurance companies, Bitcoin longs,
They're the
retail
new bank.
investors, as well as the broader fixed income universe. This slide highlights why we believe Strike and Stripe are structurally superior to traditional debt. These instruments provide us with permanent capital with no maturity, no refinancing risk, no restrictive covenants, and no collateral requirements.
Nobody does it better than their presentations.
Ability to tap follow-on capital as needed, both institutionally and for retail investors. In contrast, traditional bonds comes with fixed maturities, repayment or refinancing risk, and often require covenants and collateral. Over a 30-year period, that can lead to significant leakage from refinancing costs and added operational complexity. Our preferred equity allows us to maintain leverage without repayment risk while providing durability and scalability. Bitcoin is a 100-plus year asset. These instruments provide a 100-plus year exposure. In Q1, we issued a new $2.0 billion convertible note, which was well received by the market. The notes, due March 2030, have a 0% coupon and priced with a 35% conversion premium, reflecting a conversion price of $433 per share. We also redeemed our 2027 convertible notes in Q1, and our nearest debt maturity is now not until late 2028. The remainder of our scheduled debt maturities are evenly spread out through 2032 with a weighted average scheduled debt maturity of approximately 4.9 years. We now have $8.2 billion of total unsecured convertible debt outstanding with a low blended interest rate of approximately 0.42%. Since issuance, nearly all of our converts have increased in value significantly. On a blended basis, convertible bonds are up 62%, even outperforming.
Look at those returns.
What is even more striking is Strategy's converts in comparison to other traditional securities such as U.S. high yield and investment-grade corporates and other U.S. convertible bonds. The traditional convert market has historically offered investors
look at these returns.
Hedge funds access to volatility across different industries and asset classes. The innovation we introduced through our converts still provide volatility, but our converts offer increased volatility through Bitcoin exposure. The differentiation of our converts from others is the credit coverage that we offer, which Michael will discuss in more detail shortly. Strategy was the largest issuer of converts in 2024, and our success can be attributed to expanding the investor base of this historically closed market. In addition to traditional hedge funds, we have seen increasing participation from long-only investors, and now with access for retail investors through vehicles like the BMAX ETF, the Bitcoin Corporate Treasury Convertible Bond ETF. Our outstanding debt and preferred securities, including converts, Strike, and Stripe, are significantly supported by the value of our Bitcoin reserves, and even more so by the scale of our common equity market value. As of April 28, we have $109 billion in equity market cap, and so we have about $100 billion in equity cushion and over $43 billion in Bitcoin cushion over our fixed income liabilities. The point is that we believe our capital structure is extremely well fortified. This chart gives you a simple way to think about our capital stack across both seniority and volatility. To the far right, you'll see MSTR equity. That's your full exposure to our high-performance Bitcoin strategy. Then there's Strike, our convertible preferred. That's a step up in seniority, and it pays an 8% dividend, but it also gives investors some upside through equity conversion to MSTR. Above that is Stripe, our 10% perpetual preferred. It's non-convertible, non-callable, and really meant for the kind of capital that wants long-dated fixed income exposure to our balance sheet without the volatility of the equity.
21,000 people.
And at the top, we've got our convertible notes, senior instruments with capped upside, but higher protection in the capital structure. So what you're seeing here is a full spectrum of choices, whether someone wants equity upside, yield with optionality, or pure senior exposure. That's what makes our overall capital structure so scalable. We are building a platform where investors can pick their spot on the risk-return curve, and we can raise capital intelligently from each part of that curve. Thank you for your time today and for your continued support of Strategy. I'll now turn the call over to Michael for his remarks.
That was beautiful. Yeah, I hear you. 10% is amazing. Saylor? Calling Michael Saylor.
Okay. I want to thank everybody for being with us today. And
I'm going to start with an observation. Strategy is the world's most widely held Bitcoin security. And you could think of it as the most widely held Bitcoin proxy. In fact, substantially more widely held than any of the spot ETFs in the world. We did some review of that in the past few months, and we found that there are 13,000 institutions that have accounts holding MSTR. And these institutions are not just asset managers, a lot of pension funds, insurance companies, and even sovereign wealth funds. We traced 814,000 retail accounts. And we have 500 plus ETFs and funds and indices that we're embedded in, like the Nasdaq 100, the Russell 1000, the MSCI index. Some of these are extraordinary. For example, the Norway Sovereign Wealth Fund, it's benefiting every single citizen of Norway. We've traced our holdings to insurance companies that have millions of beneficiaries, and pension funds that have many, many millions of beneficiaries. So all told, our best estimate is 55 million beneficiaries who are either indirect holders of MSTR or they're beneficiaries of the institutions that are invested in MSTR. We can go to the next slide. I'd like to talk a bit about our BTC models. And you're probably familiar with BTC yield and BTC gain because we've talked about those a lot over the past 6 months. But in fact, I get lots of questions about how the company is going to continue to outperform Bitcoin. How are we going to continue to grow the stock? What is the basis for the premium to NAV? And in and of themselves, yield and gain only tell you part of the story. If you want to understand how we create shareholder value, we have to look out much more than just the current period. We're looking out a decade, and we're considering the consequences of all of our capital markets transactions. And so we internally use a variety of these BTC metrics, and I'm sharing them with you today. And I'm going to explain how we use them, how we think about them. Some of them are valuation metrics. Some of them are credit metrics. We've got some that are forecast metrics, if we go to the next slide, like volatility and ARR. And then we have treasury metrics, where we're calculating the value of our treasury, and we have metrics that allow us to assess how accretive any particular trade or any particular transaction is at any point in time. We even have some risk metrics. We have not just credit risk metrics for the credit instruments, but we have BTC risk metrics where we assess the hurdle rates and the break-even points of our various capital markets transactions. So let's dive right in. First of all, the degree to which any capital markets transaction is accretive and going to create shareholder value is a function of some outlook or expectations. One thing that's really important is, what do you think about BTC? Do you think that Bitcoin is going to go up 0% a year forever? And if you do, we call that a skeptic. Do you think that Bitcoin is going to track the S&P index about 10% a year or so on average? We call that a trader. Do you think that Bitcoin looks like a Magnificent Seven stock or a dominant digital monetary network, a Google, a Microsoft, an Amazon? Those normally have growth rates of 20%. We call that an investor, a tech investor, if you will. And then, do you believe that Bitcoin is destined to demonetize lots of other assets as digital capital? That makes you a maximalist. My long-term forecast personally that I shared last July in Nashville was that I thought Bitcoin was going to go up 29% ARR on average for the next 21 years. So you can see my forecast over the next 21 years is about a maximalist forecast on average for a long period. If you are more aggressive than that, and in the near term, especially over the next 5 years or 10 years, you might have a shorter time horizon. Or you might just think that the base case is conservative and you might have a more bullish case. You might be a double maxi and think a 40% gain is coming, or even a triple maxi and think a 50% a year ARR is possible. So just keep those numbers in mind as we do this analysis, because the important takeaway is your view of the equity and the credit instruments as an investor will be a function of your view of BTC. So first point to be made, why do people want to hold MSTR? What drives the premium to NAV? What creates the magnetic appeal or the gravitational attraction of this asset? Well, one thing is the volatility, and we have a volatility which is higher than BTC. It is also higher than any of the S&P 500. When you have that kind of volatility, you can generate yield by simply selling that volatility. We've quantified that value of that volatility in a metric we call the MSTR rate. Think of it as the simple annualized yield you can generate by selling at-the-market call options with a 30-day to expiry. If you just keep rolling those call options and keep selling them all the time, you generate 103% simple annualized yield on MSTR. That's substantially higher than NVIDIA or IBIT, and it's substantially higher than the Nasdaq 100. You can look at it as, again, it's like the magnetic attraction to capital. People might very well buy MSTR to sell that vol, not even knowing what BTC is, not even knowing what MSTR is. All they know is they want that 103%. Now, another point that I'll make is, if you're in a taxable account, you're getting 103% yield that's taxable, and so your after-tax is going to be 70%, 60%, whatever that is. But if you're in a tax-free account or a tax-advantaged account, or it could be a retirement account, or if you're an offshore vol trader, if you're sitting in Dubai or you're sitting in a zero income tax environment and you reinvest this rate, you can get to 200% or more annualized yield. So of course, that makes our security, MSTR, globally interesting to traders and very interesting to people that would simply like to sell vol. And another point that I'd make is that when you're considering an equity to sell vol on, what you'd like is volatility. You would also like liquidity. You would also like durability. You want 103 vol with $5 billion of equity trading every day, and you want it to continue for a decade. And you want credibility. So think volatility, liquidity, durability, credibility. And now think about three classes of companies. Weak, struggling companies occasionally are volatile, but their underlying operating business is losing money, so they're not durable. So if you have a volatile business and you're losing cash, it's interesting to trade for a while, but the trade doesn't stick around. And on the other hand, strong companies, well-run companies, the Microsofts of the world, they actually have a management team that engages in very decisive actions to strip the volatility away from the balance sheet and strip the volatility away from the P&L. So the primary philosophy and dynamic of a well-run company is to get rid of the volatility. And if you have a meme company, a meme stock of sorts, or a random company, you might get massive volatility either for a good reason or a bad reason. But the management team normally doesn't have credibility and durability. How are you going to keep it for a decade? And so you see what we have done is we have created a volatility engine. When you take volatility, when you take a fire and you cultivate it, it becomes a furnace. And if you're smart, you make it a reactor and it becomes a power plant. And of course, what we're doing is creating a crypto reactor that could run for a long, long period of time. So that rate combined with the credibility of the management team and the transparency and the durability, plus the liquidity, that actually drives and attracts a lot of capital to MSTR. Next. Now let's talk about equity analytics. On any given day, we consider how are we going to raise money and how do we generate yield, how do we generate gain, how do we generate shareholder value. So if we were to sell $100 million of MSTR equity at a multiple to NAV of 2, then generally what happens is we capture a BTC dollar gain of half of that. The spread is 50%. We capture $50 million of that as the gain. That is the accretive component to the existing common stock shareholders. That converts to a BTC gain of 526 Bitcoin. That converts into a yield that is dividing our BTC gain by our entire stack of Bitcoin. Works out to 9 basis points. So we're capturing a yield by selling the equity and buying the Bitcoin. When we do that with convertible notes, we do it at a 0 coupon up 40 in this model, and we're just using that to make the math simple. The same transaction with converts would result in a 12 basis point yield, a $64 million BTC dollar gain, a 64% spread, if you will, and we get not 526 Bitcoin, but 676. If we do the same thing with Strike, given our general model for Strike, which is an 8% dividend and 150% conversion premium, now you're saying we're getting to a 15 basis point yield, 842 Bitcoin, an $80 million gain. That's an 80% spread. So you see the leverage is getting greater. That 842 Bitcoin is achieved without dilution to the common stock. So all of the capital, all of the investment income, or the capital gain, if you will, from the 842 Bitcoin forever will accrue to the existing shareholders, the existing common shareholders, and not to the new Strike shareholders. So that's how we're creating an upside opportunity. Now when we go to Strife, Strife is the simplest model because we're selling $100 million of a preferred. We're not diluting the common stock at all. So we've got a $100 million gain of Bitcoin without any share dilution, works out to 1,053 Bitcoin. And that's a 19 basis point yield. So there you go. You see, as we go to more debt-like instruments, we're generating less dilution. They're more accretive, and they generate a higher BTC dollar gain. That we call BTC KPIs. We report that up front. We can immediately calculate these numbers, and you're seeing them generally week by week. Now let's go to the next part of the analysis. Think about the next 10 years. When we sell that $100 million of equity, we capture the $50 million gain up front. Okay, that's great. That is shareholder value created. But in fact, the question is, what happens over the next 10 years? And we use 10 years as a long time frame. Most investors don't really have patience. Long time or forever is about 10 years. So you'll see a lot of analysis here that's about 10-year analytics. What you can see here is, if you're a maximalist like me, and like many of our common stock shareholders are maximalist, and you crank in a 30% BTC ARR forecast, that $100 million of capital grows to be $1,379 million in year 10. So now what has happened? Well, we've created $50 million in gain one time, but we've actually created a lot of investment income. And half of that investment income is attributable to the equity dilution. And so the new shareholders are benefiting from it. But the other half of the investment income is captured by the common stock shareholders that existed before the transaction. So that's what we call BTC dollar income. BTC dollar income is the value that's created for the common stock shareholders of MSTR by having sold the $100 million of equity. And if you ask the question, well, how much value is created for the shareholders over the course of the decade? Well, it works out to be the gain plus the dollar income. And so you end up with value of $689 million. So we call it BTC dollar value, $689 million. Now, you can take the ratio of the value created to the capital raised, and that works out to what we call BTC torque. That's sort of a return on capital measure. What is our return on capital? 6.9x. So why is that valuable? Well, if you want to outperform BTC, then you're going to need to find a way to get leverage. So that torque is leverage that allows the MSTR equity to outperform BTC over time. If you want to drive up the price of the value of the stock, or if you want to drive up the MSTR stock, you have to create value. And you can see right here, if we create $689 million of either gains or incremental investment income without dilution, that is the value creation. So we're creating a $6.9 of value for every dollar of capital we raise when we do this kind of transaction. Now, there's another metric you can calculate, which is BTC multiple. And BTC multiple in this case is equal to the total BTC NAV, like $1,379,000,000 over the equity issued. And you can see that the equity was $690 million or so. So in this case, and this makes total common sense, right? We started with an MNAV of 2. We sold $100 million of equity. Half of it was a gain. The investment income and attributable to that gained amount is one half. And the investment income that's attributable to the equity dilution is the other half. Now, I think that if you look at this BTC multiple, that will tend to set the floor for MNAV. It's not the ceiling. It's not necessarily the average. So there are about a dozen other factors that drive a premium to BTC, and they drive the MNAV north. One of them in isolation is our equity sales or our equity financing here. And so you focus upon the 2 BTC multiple and, think that if we do a lot of capital markets activity around a 2 multiple, that will tend to drive the MNAV toward or above or keep it above 2. And the degree of impact it has, of course, is a function of how fast we raise capital and the amount of capital we raise relative to the existing Bitcoin NAV. Now, there are 3 possible objectives of our capital markets activity. The first and the principal objective is drive up the price of MSTR. Second, outperform BTC. Third, increase the MNAV. And if you think about it, you said, well, which one do you want the most? Well, you want the price of MSTR to be maximized, but the other 2 are consistent with it.
He does, yeah.
And how are we going to do these things? Well, it's a function of raising capital at a high spread that we create shareholder value at the fastest possible rate. So bear in mind, this chart's the baseline. Now let's go ahead and look at what happens if we substitute convertible bonds. Well, the converts have 40% leverage in them. And so what you can see here is that our torque goes up to 8.9. So there's a lot more torque on this, almost $9 of value creation for every dollar of capital raised, or $9 of BTC dollar value for every dollar capital raised. And you see the BTC multiple moves to 2.8. So that's going to tend to drive up or support a much higher MNAV. It's also going to tend to create more BTC dollar income for the common stock shareholders. Now let's go to what happens if we go
31,000 viewers now.
At Strike, you can see we have a higher premium. And so now the torque is even increasing. The return on capital looks even more impressive. Of course, 150% premium ought to do that. And what you can see is the expected equity dilution, and this is the theoretical equity dilution, is much lower. The BTC multiple goes to 4. You could imagine that tons of financing of Strike will tend to justify an MNAV of more than 4 if we can change this to be a substantial mix to our capital raising on an isolated basis. Now there are couple of other dynamics here. One point I make is this is really on an isolated basis, and it's a theoretical calculation because as a practical matter, the $340 million of equity you see in year 10 is sitting in the Strike instrument, and if Strike is generating a dividend, it's quite likely that people that buy Strike will never want to convert Strike into equity. They have the right to do so, but they may not do it. So this is an example of a theoretical equity dilution, but practically speaking, you're getting a lot of leverage from this instrument because you're attracting a new class of investors, and they don't want to actually convert this to pure equity if they're buying it in order to hold it for the liquidation preference and the dividend. But you can see torque is improving, multiples improving, and we're generating $10 of BTC dollar value for every dollar of capital that we raise. Now, let's talk about Strife. So the torque for Strife increases to 12.8. You see a lot of torque because at the end of the 10 years, you've only issued $100 million of equity. That's equity that we assume we issued to pay the dividends. We've got $1.37 billion of NAV. What's interesting here is you see the BTC multiple goes to 13.8. So Strife is incredibly leveraging to the common stock shareholders, and it generates potentially extremely high return on asset and extremely high return on equity. Now, let's look at broader cases here. Coming back to my chart, you can see that when we do these transactions, only a small part of the story is the BTC gain, right? $50 million worth of gain immediately, but we're looking at $639 million as the share of BTC of investment income attributable to the shareholders, without expected dilution. So the real BTC dollar value, 689 million, of which less than 10% of it is the gain up front. Most of the leverage you can see is really coming on the back end of the transaction. And you can see as we go to the right, you're getting to substantially larger value creation, 800 million, a billion, 1.3 billion. That's all assuming a 10-year time horizon, 30% ARR, and 2 times NAV. Now let's look at other cases. I'm going to show you BTC torque for 1 times NAV. If we were to sell equity at 1 times MNAV, then you can see there isn't any torque, right? If you're basically selling the equity at the MNAV, you're not really creating shareholder value on an isolated basis. That is, the first order result of the capital market transaction is simply to expand the equity capital of the company. By the way, that's not necessarily a bad idea. You might be expanding the equity capital of the company, making the other credit instruments more creditworthy. You might increase liquidity. You might actually increase volatility because of name recognition and for a lot of other second order reasons. But on an isolated basis, you're not generating torque here. If you look at the convertible notes, you generate a little bit of torque. You can still generate some torque. And if you're a maximalist, you expect 30% ARR, you're going to generate a 3.9 torque, $4 for every dollar capital raise. So you can generate shareholder value using convertible financing if you are very bullish on Bitcoin. When you go to Strike, it becomes easier. For Strike, you can see you're generating a lot of shareholder value here, even just as a trader with a more skeptical outlook. And the torque increases a bit faster. But of course, the real strategy, if you've got a low MNAV to get the engine going, is you're selling Strife, because Strife is generating extreme torque. Strife is generating $13 for every dollar of capital raise, even with MNAV of 1. And so you see the Strife numbers go from 1.6 as a trader all the way up to 56x if you're a triple maxi. So that's our 1 MNAV chart. Let's look at it for other multiples. Here's 2 MNAV. Now what you see here is when you get to 2 times MNAV, you can generate pretty decent torque with the equity, $7 for every dollar capital raised. You can generate a lot more with the converts. You can generate a ton with Strike. And then Strife, what you'll notice is the torque is exactly the same. It is invariant to the MNAV, right? It's a pure fixed income instrument. Now let's go to 3 times MNAV.
Yeah.
Now you see at 3 times MNAV, you're starting to generate $9 for every dollar capital raised, over the 10 years if you're a maximalist. And of course, that really improves the returns of convertible notes and Strike dramatically. And you know what doesn't get any better? Strife, right? Strife torque is exactly the same regardless of what the MNAV is. But you see that it's getting easy to generate torque with MSTR and convertible notes as the MNAV increases. Now, let's take a look at BTC multiple. This is also instructive. So you're sitting with a multiple of 1. Your BTC MNAV or BTC NAV is equal to your BTC equity. And what you can see is it doesn't really matter what your outlook is for BTC. Your multiple is 1. And with converts, it's 1.4. And with Strike, it's going to go, there is a little bit of sensitivity. You can get up to a 2.3, a 2.3 multiple to 2.4. But you can see when MNAV is pretty low, you have to go to Strike or to Stripe. But now look at Strife. Look at the BTC multiples for that. You're going from 1 to 57. And if you're a Bitcoin maximalist and you think you're going to get 30% ARR, you're getting 13.8 multiple. You could imagine driving the MNAV up, from 2 to 3 to 4 to 5 to 6 using Strife type financing, even when the MNAV is 1, right? The MNAV could be 1, but the issue is how much capital do you have? How much Bitcoin do you have that's collateral? Because if you have a lot of Bitcoin that serves as collateral and you can sell a lot of Strife or other kinds of currency swaps or fixed income instruments, you're going to actually put leverage back into the capital structure and you're going to drive that MNAV back up. And of course, you're going to drive outperformance against BTC as well. Let's look at 2.
Fuck.
When MNAV goes to 2. Well, now you can see the equity's pretty, it's pretty predictable, 2x no matter what your BTC forecast is. And Strife is pretty predictable as well. But the convertible notes start to become more effective, and Strike becomes a lot more effective when you're doing that capital raising at 2. And at 3, Now you see convertible financing at 3, and you might very well put a floor of 4 or 5 MNAV underneath the stock. And with Strike, you're getting to numbers like 4, 5, 6. With Strife, of course, Strife doesn't really care. So this gives you a sense of the sensitivities of BTC torque and BTC multiples to MNAVs. Now let's try to chart it.
Yes, literally steak and eggs. Yes.
We've got a yield curve,
insane.
and I'm showing you the BTC yield curve. And on one side of the yield curve is Strife, and what you can see is I've created the yield curves for various MNAVs ranging from 1 to 2 to 3 to 4 to 5. So when the MNAV is 1, you've got a very steep yield curve. And you can see here that you're getting max yield with Strife and some with Strike, and then you're getting a bit with the
people will be piling
converts.
into Strife and Strike, just like I
and then you
talked
see
about
the
at
equity
lows
isn't
in
generating
Bitcoin
any BTC
when
yield.
the MNAV is low.
But as the
right.
MNAV increases, the yield curve flattens. And of course, you can see, at an MNAV of 2, you're getting decent, healthy yield across all parts of the yield curve. And as the MNAV increases and it flattens, then you can see the yields on the equity and the convertible equity instruments start to approach the yields from the hard, from Strike and from Strife. And this is important to keep in mind. Let me convert that to spreads for you. Spread is the percentage of the capital we raise that results in a gain to the shareholders. That is, how much of the capital is an accretion? If I've got a spread, I've got an MNAV of 5, that means when I sell $100 million worth of equity, $80 million is the value of the gain. And so our shareholders are capturing 80% of that capital, right? It's an 80% spread. So you can see here that, Strife is a 100% spread instrument. Strike generates spreads anywhere from 60 to 92% based upon the MNAVs. The converts will generate spreads from 29 to 86%. And of course, MSTR.
So essentially, guys, what he's showing, I've just got to speak to this. If we're at a 1x NAV, that probably means that we're in the depths of the bear, right? It means you're not going to get a really strong return off of the stock. You'll get more from the converts, more from Strike, and more from Strife. And the benefit here is going to be for people to purchase these two, Strike and Strife, in the deep bear. And then at the same time, when the market's humming along and the NAV's really high between like 3 and 5x, then these others are much more interesting. The stock becomes more fun to play with, and you'll probably see less issuance of Strike and Strife and the converts. So it's just very interesting. He's showing you how this is going to ride the waves. It's kind of beautiful.
Or if the MNAV is 1, it generates no spread. When the MNAV is 2, it's 50% spread. There's a pretty big difference between 2 and 1. Massive difference. When you get to 3, it's 67% spread, and that is 2/3 of all the capital you raise is a gain generating yield for the shareholders, and that yield is what allows us to outperform. Why don't we go to the next slide? So you're asking the question probably, well, this is all well and fine. If I'm selling these fixed income instruments, I'm getting a higher yield, I'm generating a higher spread, but what's the risk? You've got an 8% coupon or dividend on Strike, you've got a 10% dividend on Strife. So we think about what is the hurdle rate that we have to overcome in order to avoid missing our numbers, or in this case, if I report that we generated 100% spread on Strife, and we show you BTC gain equal to $100 million, well, under what circumstances would that not be true in a decade? And the answer is, as long as BTC ARR is north of 7.2%, then that gain holds. So in essence, the hurdle rate is 7.2% for Strife. The hurdle rate for Strike is 6.1%. The hurdle rate for the converts is 2%. And the hurdle rate for the equity, intuitively, this should not be surprising, is 0%. As long as Bitcoin is appreciating more than 0%, then there will have been a gain and a yield on an equity transaction. And so, generally, most of our equity investors expect BTC to appreciate more than 7.2%. As I said, the maximalist thinks 30%. So generally, if you believe BTC is going up 10, 20, 30%, most of the financing we're doing is comfortably above these hurdle rates, which means that when we say we generated a BTC yield of some percentage or a BTC gain of something, I think you can be comfortable that it's a reasonable metric for you to take into account. Now, let's think about break-evens. Under what circumstances would it be a mistake to have done any of these financings? Or another way to say it is, are there any circumstances under which we don't create shareholder value? I'm using a 10-year time frame, and so I'm going to show you some numbers. If we sell equity at 1 times MNAV and the price of BTC is 95,000, the break-even price is 95,000 in 10 years. And the BTC ARR, or the break-even rate, is 0%. That's kind of common sense. Now, what if I sell it at MNAV of 2? Well, the break-even price drops to 47,000. Bitcoin could decrease 6% a year for a decade, and you would still be better off as a common stock shareholder with us having done that transaction. So in fact, when we're selling equity at MNAVs of 2, 3, 4, 5, we're de-risking the company. We're not increasing the risk. So you can see here, I've got the break-even prices and the break-even rates for the equity, for the converts. I've got it for Strike. I've got it for Strife. It's kind of a bit of a surprise, but we sell a lot of Strife. We attach a 10% dividend to it, but it turns out that even if Bitcoin goes up 0% a year, we're still breaking even over the 10 years. So we're not actually taking, I think, as much risk as it might be perceived by a traditional investor who doesn't really think hard about what's going on here. Let me show you some pictures to make this easier. This is a break-even price for equity over the 10 years. And what you can see is that if you thought that Bitcoin was going to go down to 65,000 a coin over 10 years and you had a chance to sell it at 2 times MNAV, you should do it. Right? Whenever a BTC Treasury company, a BTC company is selling at 2, 3, 4, 5 times MNAV, they're de-risking the entire value proposition for their investors. They're not increasing risk at all. And you can see, if you get a chance to actually sell equity at 5 times MNAV, Bitcoin could crash to 20,000 a coin, and you would have created shareholder value having done it over a decade.
Crazy.
Let's go to the next slide.
Just crazy. Fuck.
This shows that same break-even price for convertible notes. And as you can see, it's really, it's a lot less risky than you might think it is. I mean, you're staring at the numbers. Bitcoin can literally go down, and you would have wanted to have done this. And this is on an isolated basis, too. That is to say, we're just isolating this transaction. We're not considering the second and third order benefits of having raised billions of dollars of capital.
5x, it would be 50K.
If you raise extra capital, you get more liquidity, you might get more volatility, the vol will go up, people will come in, it'll increase the MSTR rate, it'll attract new capital, et cetera. So there's a lot of integrated benefits from this, but on an isolated basis, there's the break-even price. Let's go to the next. So you see with Strike, the break-even price is a function of MNAV, and it's a lot less correlated than the equity is, but you can see the higher the MNAV, the less risk there is, and the truth is, when you're doing a transaction like this, it's kind of beneficial to you under most circumstances. It de-risks the balance sheet. Next. And of course, Strife, this is very simple. 85,000, 85,000, right? Doesn't matter what the MNAV is, and you can figure out that if you think that BTC is going up in value, then probably this is a good idea. If it's going down, it's probably not a great idea. Let's go to the next. So now I'm going to talk about, the $100 billion question, which is, why does MSTR trade at a multiple to BTC NAV? And there's a lot of misconceptions about this, and people, you hear all sorts of things. People think it, they don't really understand why. And I think I'd like to share some of my observations as to why. First of all, MSTR, the security, has a compliance advantage over BTC, the commodity, or BTC spot ETFs for many investors. Many investors, either they have their money locked up in funds where they're not allowed by the trustee or the custodian to buy BTC. There are many wealth managers that won't let you buy the ETFs. There are countries like in the UK where there are examples where they would let you buy MSTR, but you couldn't buy BTC. There are places, there are many brokers, they will let you buy MSTR, they won't let you buy the BTC spot ETF. So when the security has a compliance advantage, then there are pools of capital that are going to buy it because their choice is to not get any BTC exposure or to do it through MSTR. That creates a premium to NAV. The second point, MSTR is a credit advantage to BTC. If I have a security trading on the Nasdaq that's deeply liquid, I could borrow against it via margin loan. Maybe I get a SOFR plus 100 basis point loan. That means that I have a lot of capital and now it's liquid. I can borrow against it from a big bank that I trust. I can't borrow at SOFR plus 100 basis points against BTC from my Morgan Stanley or JP Morgan or Bank of America or fill in the name of a big bulge bracket bank. So I can't get margin loans on BTC at all. And in most cases, you can't get a margin loan against BTC spot ETFs. It's very, very hard to find people that will extend margin credit. So this impacts the market in two ways. One, I could buy a bunch of MSTR and hold it forever and just live off of loans that I take against it while it appreciates. And that's a nice strategy. The other way it impacts is if I had a portfolio.
He's telling you how to do it.
Fill in the blank. If I had $100 million of equities, I could buy $1 million of MSTR borrowing the money from my prime broker with no cash down. So people can buy and leverage into a company that has a credit advantage, and then they can borrow against it and margin it. And so you have to ask the question, if you live in a neighborhood and the houses on the left side of the street are eligible for Fannie Mae or Freddie Mac mortgages, and the houses on the right side of the street you have to pay cash for and you can't put a mortgage on.
Which one are you going to pick?
All things being equal, if the two houses are identical on either side of the street, which house is going to have the higher price?
Crazy.
I don't think it's complicated to figure out that if I can borrow the money to buy the house on the left side of the street, I'll pay more for that house because there's no money down and there's 20% deposit.
He's right.
And if I have to come up with cash to buy the house on the right side of the street, I'm going to offer less as a cash buyer because it takes me 20 extra years of my life to come up with the cash. I mean, it's not complicated, right?
Brilliant.
It's financeable. And BTC is not really being financed. I don't know of any major bank in the world that'll finance BTC.
He literally wants to be the Bitcoin
and it's
bank.
Very, very difficult.
He's telling you this is us.
Find anybody that'll
bank.
finance BTC spot ETFs.
So let's
go to the third point. MSTR has a higher volatility than BTC. And we talked about it, if Bitcoin is trading with a vol of 50, we'll oftentimes be 80. If it's 60, we might be 90. That results in a higher MSTR rate than, say, the IBIT rate. That means that you have a larger, deeper, richer options market. Why would I want to accept 60% when I could get 100%, right? I mean, it's very simple apples to apples thing. So the volatility drives the options market, drives the yields, attracts capital. The next point I'll make is that the options, they have that higher simple annualized interest rate for those selling vol, and that makes it possible to create ETF instruments like MSTY and IMST. And those ETFs, they basically are selling the vol of MSTR. And they have very, very high annualized dividend yields. So for a typical investor that wants to capture 100, 150, 200% dividend yield by selling the vol, they don't want to, it's difficult to trade in the options market. And so maybe they just buy MSTY or IMST. That makes it easier for investors to monetize that volatility. How popular is this? Well, MSTY today looked like it had 3.1 or $3.2 billion of AUM in it.
Crazy.
And IMST has raised something like $40 million of capital in a few weeks, a week or 2 weeks or something, not that long. And so these are attracting capital flows. They're attracting capital that wants to monetize that volatility, and they're part of our emerging ecosystem. And so why MSTR? Because we're the most liquid, we're the most volatile, we're the most durable, and we're the most credible place to get that. So our equity is becoming volatile, liquid collateral for traders. And that creates a demand for the equity that drives up the price of the equity as these instruments are delta hedged, or as people buy the underlying equity so they can sell the covered calls.
Fucking A.
My next point I'll make is that our convertible bonds, they attract capital from a new class of arbitrageurs and hedge funds that otherwise they wouldn't buy BTC, and otherwise they wouldn't buy BTC spot ETFs. So if you're unique, you've got a differentiator, and we're an operating company, we can issue convertible bonds. A spot ETF cannot, and there isn't any comparable type instrument on top of a BTC commodity. That takes me to my next point, which is BMAX, which is another ETF that was launched.
This is crazy. He's literally telling you all the instruments to invest in his MicroStrategy, even if they aren't his.
Most investors,
fucking crazy.
If you're not QIB or 144A certified or compliant, you can't just buy the convertible bonds. They're over-the-counter traded. But you could buy BMAX, and BMAX buys, it's like 80% or something exposed to MSTR convertible bonds. So that's a unique characteristic of MSTR. Again, the uniqueness, the opportunity is a differentiator. MSTR, the security, is included in QQQ, MSCI, and crypto indices. And as we get built into all these ETFs, that drives passive capital flow. And so, on a day when the Nasdaq 100 is surging up 2%, there's a lot of capital that's going to go into the risk-on trade. It's going to go into QQQ. That will find its way to us. That is an advantage over underlying BTC. The BTC ETFs and BTC itself, they're not in the Nasdaq index. And so if you're wondering, why would there be more demand for our stock? Because we're a security and because we do get indexed like this. The next point I'm making is that the MSTR brand is recognized worldwide, and so our brand recognition and our scale, they drive superior investor interest. It's very common, and it's very interesting to note, if you combine this with the next point, many investors, they're obligated to invest in securities, or they're biased toward investing in securities, because the history of commodities is not good. right? The only commodity that you could ever invest in over the long term is gold, and gold is considered to be kind of a slow dead asset. So most investors, the great majority of their money is made investing in securities. So when I'm speaking at investor conferences and I'm telling everybody how great Bitcoin is, and I'm giving them 100 reasons why Bitcoin is great, it's not uncommon that they say, well, I decided to buy your stock. I don't have to ask them. They're like, well, I get it, the Bitcoin is great, but my prime broker doesn't handle Bitcoin, and I just want to buy the security. It's quick, easy, it's marginable. I can buy it in 15 seconds. And people can't, it's like, why did Domino's Pizza get successful? Domino's Pizza was successful because people like pizza, and because anywhere in the country, you could pick up the phone, call the operator and say, give me Domino's, and say, hey, send a pizza. And you know that there's a Domino's Pizza somewhere close to you. And it's like, the brand is weaker for the next 100 pizza companies. Maybe their pizza's better, but I just don't know who's in the place I'm traveling to. So it's just like, why do people buy Diet Coke? I go to a restaurant and I ask for some other kind of Coke, they don't have it. And then I ask for Diet whatever, they don't have it. And I get frustrated. And after I get beat down because I don't have it, I think, I'm just going to ask for Diet Coke because I know there's a 95% chance they're going to have it. So you're an investor, you have a lot of money, you don't have a lot of attention span. What is this Bitcoin thing? What's the stock I can buy? MicroStrategy or strategy, I see that on the screen. The brand does matter. It makes things easier. If I'm going to buy the third best or the fourth best or the fifth best, I got to research it. I don't, no one's heard of it before. There's a lot of impedance. And so with that, you see, the next point I'll make is that MSTR represents the strongest BTC exposure in the strongest capital market. A lot of people want to buy a stock in the United States on the Nasdaq or the New York Stock Exchange. They trust it. And if you're looking for BTC exposure, give me the biggest and give me it in the safest place. It's very simple. The last 3 points I make on this NAV thing is that Strike is a unique security. It's a lot more leverage than equity. It's a lot more leverage than a convertible bond. Again, as I pointed out, it's quite possible we'll sell, we could sell a lot of Strike, billions and billions of dollars of it that's backed by a lot of equity, and the equity the conversion rate never takes place because people don't choose to convert to common equity. And so you're creating a lot of leverage when you finance with Strike. And you're acquiring a new class of investors that maybe would be afraid to invest in common equity because it's too much of a roller coaster. By the way, there are a lot of people that might like Bitcoin and they're afraid to invest in a spot ETF because what they want is kind of like Bitcoin with guardrails and or Bitcoin with a downside insurance policy. And Strike looks more like something with guardrails, than just buying the straight spot ETF that gives you pure Bitcoin vol. Strife, another example of a unique fixed income security. It attracts new types of capital. It's a perpetual dividend. There's no one offering a 10% dividend at par forever. It's very uncommon to see that. I've never seen that in any other security.
No,
nobody. And it's also, as Andrew pointed out, these things are high performing, but they're very liquid. And the fact that they're high performing and liquid is an appeal to an investor. And they draw new capital. And as capital flows into Strike and Strive, that's extremely accretive and leveraging for the performance of the equity. If you study banks, you notice the number one strategy of most banks in order to create leverage for the common stock is they issue preferred stock. It's a safe way to do it. It's mezzanine capital, mezzanine equity, if you will. And so, you could say we're doing something innovative, but we're also lifting a page from the book of conventional banking by putting in place this mezzanine capital structure. And if you would ask any bank, why do you do it? The answer is, it's good for our common stock. It increases the yield, the dividend on the common stock without creating risk on the balance sheet. The last point I make here is that we have the potential to generate BTC yield in perpetuity via fixed income securities. you know, the MNAV could go to zero. We can still generate yield by selling Strike, selling Strife, selling other corporate bonds, selling any fixed income instrument. And we also can scale up the sales of those things. In essence, if we're selling, if we're selling something 10x over collateralized by BTC, we can basically sell preferred instruments that are equal to 10% of the capital structure, and if Bitcoin goes up, we just keep scaling up the preferred instrument in the same way. So this is an opportunity that it isn't like it's one and done. It's like we could reasonably be doing this forever, because there's always going to be a demand for USD yield. And if you believe that BTC is going to have the performance of the S&P index or more,
which I do,
then you'll always be able to swap BTC yield for USD yield and capture a spread. And if we can do that, then we can create performance which is superior to BTC, and we can maintain a multiple of NAV. I tend to think that a very reasonable way to calculate the right BTC premium for the company would be to take the expected BTC yield and multiply it by a multiple of 10 to 20. So if we can generate 25% BTC yield, then 10 times that would be a 250% premium to NAV, an MNAV of 3.5, if you will. And if you put a 20 multiple on it, you could find your way to a 500% premium to NAV. And so you look at all these things in their entirety, and then you take into account the rate at which we raise capital and the spread at which we raise the capital, then all of those things give you a sense of how we outperform Bitcoin and how we grow the NAV. Let's go to the next section. One thing. Let's go to the next page. Sorry. Yeah. What's our strategy to maximize shareholder value? Well, continuously adjust the rate and the mix of our BTC Treasury operations based on market conditions. We're going to work the yield curve. When the yield curve is steep, we go to the far end of the yield curve and we do fixed income. When the yield curve is flat, we work all sides of the yield curve. Brilliant. And also there's a function of how much demand is there in the market for every type of security we're selling. And then we're balancing near-term capture of BTC yield and gain with long-term BTC value creation. Yeah, I mean, I can maximize the yield and the gain this year, but I also got to look out over the next decade. And as you could see from my slides, 90% of the gain is going to be over the 10-year period that follows the transaction. So we're always balancing short-term versus long-term, just like Amazon did that for 20 years. The goal, is to drive up the stock price, to drive MSTR to the max, and then to grow the company and reach its full potential. So we will support MNAV, right? And we are seeking to drive it up over time. So
yes, he said they're going to support it.
When you look at the MNAV and you're wondering, what are we thinking?
Fuck yeah.
Well, we're thinking we want it to go up,
that's the
not
answer.
Down. We're never acting
that should make
to
Josh a
hammer
little
it
happier.
Down. When the MNAV is expanding and when there's massive demand in the marketplace, then of course we're looking to sell and convert that into a BTC gain, a BTC yield, and BTC income and BTC value over time. Yeah. So the best way, of course, for us to support the MNAV is maximize intelligent leverage with Strife, and other fixed income instruments.
Sure.
We'll be educating the capital markets to
no
build demand for
GBTC
every
events,
type
guys.
Of security we issue. So there's
no
a lot
MNAV
of
of
investor
54%.
relations and education. We will work to attract capital, new forms of capital, by creating innovative securities for new classes of investors. Strife is a new type of security. Strike is a new type of security. We have other ideas for new types of securities. Securities that would attract capital from global markets, attracting capital from Japan or Europe or Canada or other markets, and also attract capital from other classes of investors, different types of investors that want a different risk return vol profile and yield profile. And so we have some flexibility there.
Brilliant.
We're going to create and share BTC credit metrics and models that can assist investors in valuing and assessing the risk of BTC collateralized credit instruments. And we're going to pursue credit ratings for our fixed income securities. So the credit side of this is really important because, as you could see from my torque and my multiple calculations, the thing that will drive drive our outperformance that allows us to achieve a 2x BTC return or get MNAVs of 4, 5, 6, 8. If we want to drive that up, if we want to drive our performance up, if we want 2 times or 3 times the volatility of BTC over time, then we need to develop the credit markets. And I've thrown a lot of metrics at you, and I've talked about a lot of things. We have a lot of securities.
46,000 people watching.
But lest there be any confusion, MSTR, the common equity that is, that's the principal metric for shareholder value creation and company performance. So if you're asking what is winning, winning is maximizing the price of MSTR, right? I mean, if I have a choice of driving the price up by a factor of 10 and having MNAV be 3, or having the price go up by a factor of 2 and have MNAV be 6, I think that you would want me to drive the price up by a factor of 10, not a factor of 2. So we're always thinking about what is going to maximize MSTR, shareholder value creation, and we're balancing every other metric against it. Now, I've talked about BTC credit, and that's important to our strategy. So why don't we go into a bit more detail on that? Because I think that's also very important.
Jesus.
I'm going to share with you our BTC credit model and our credit analysis. So let's just start with a few important metrics. The BTC rating, that would be the amount of collateral we have versus in BTC divided by the liability. So we have $10 of Bitcoin against a $1 liability. That would be a BTC rating of 10. And BTC risk is the probability of that liability, that debt instrument being under collateralized by BTC at the end of its term. I've got $10 of collateral, I got $1 bond or $1 of debt, and it's 5 years. In 5 years, am I still going to have the $1 to cover the liability? That's the risk. BTC credit, that's the credit spread necessary to offset the risk for a given security. How much more credit spread, how much more yield do I need to be paid every year in order to offset that BTC risk that I'm thinking exists? And the BTC credit hurdle, that is the BTC ARR necessary to create an investment grade instrument. How bullish would you have to be on Bitcoin for you to look at this credit instrument and say, this should be investment grade? And our proxy for investment grade is a 100 basis point credit spread, just so you know. Now, it turns out that credit model is driven by some forecast assumptions. What do you expect the ARR to be? What do you expect the volatility to be over time? And so now I'm going to show you how these play out, in our capital structure. Let's go to the next slide.
This is fucking insane.
Here's BTC risk.
I'm going to have to spend hours on this.
Okay, what you can see is that if I actually ask the question, what is the risk of a 10x over collateralized instrument? I have $10 of Bitcoin for every dollar I owe. If the volatility is 70, right? You'll see it's 16 basis points. There's a 0.16% probability you'll be under collateralized in a 1 year horizon. And of course, if you've only got $2 of Bitcoin for every dollar of debt and you've got a 70 vol, there's a 26% BTC risk. So there's a zone, high volatility, low BTC rating, where you're looking like junk. And there's another zone where you're looking like investment grade. Now let's take this and apply this to our capital structure.
This is just nuts.
Can we change the slide? Okay. Sorry. This is a bit more elaborate BTC risk matrix. What this is showing you is how the risk builds up over time. And so if you have a BTC rating of 5 and you've got a 5-year bond, then and you've got a 50 vol, that says that you've got a 19% BTC risk, a 19% risk of being under collateralized at the end of the 5 years. And you can see over 10 years, you're looking at a 41% risk. So risk will increase with higher vol, risk will increase with higher duration, risk will increase with lower BTC rating. Let's go to the next slide. This is our existing capital structure. So I'm showing you 8 fixed income instruments. Let's assume that you're a skeptic. You actually think that Bitcoin is not going up. Bitcoin is going to trade 0% ARR for the next decade. So I'll say skeptic because I think if you thought Bitcoin was going to 0 tomorrow, you're not going to buy any of these instruments. But hardcore skeptic thinks Bitcoin is not going to perform like the S&P index. So if you actually calculate the BTC rating of these instruments, this is not hard. You can see the senior credit instruments is the 28 convert. It's 52 times over collateralized. The next one is 13 times over collateralized. So now, what's the most junior fixed income instrument? It would be Strike, which is 5.3 times over collateralized. So what you can see is now, what is the BTC risk? Well, the duration of the converts is short. So the duration of the 28 note is 2.4. That means the risk is literally 0%. And the credit spread, the BTC credit you would have to offset the risk is rounded down from 1 basis point, it's 0. So there is 0 likelihood, a very, very small likelihood that we're not going to have $1 billion of Bitcoin collateral to pay this note off in 2.4 years. That makes intuitive sense, right? You have to have a 98% drawdown on the Bitcoin.
Probably not happening.
The question is, what's the market credit spread? Well, the market thinks that that's a 500 credit spread instrument. So the pricing of that is 500 credit spread, market credit spread. The BTC credit rating is 0. That means the premium is 500 basis points. If we go to the 29 convert, what you can see is that the BTC credit calculation is 21 basis points for the skeptic. The market credit spread is 975 basis points. Massive spread premium. If you go to the 2030, you could take the 48 basis point BTC credit, compare it to the market credit spread of 1,075. So all down the line, what you see is for the converts, there are massive spread premiums. The market credit spreads are actually at the level of distressed debt. A junk bond index is like 380, 400 basis points. This is double junk, triple junk. It's like the market thinks that the company is going to fail tomorrow, and it trades the credit like that. But in fact, even if you're a skeptic on Bitcoin, the BTC credit rating would be somewhere between 21 and 200 bips. Now you can see how you would rate the preferreds. They have a longer duration, 10 and 11 years. You would come up with a credit rating of 470 bips if you're a skeptic for Strife, and 514 for Strike if you're a skeptic. There's still a substantial spread premium.
This is fucking so
now,
crazy.
if you're a credit investor, you might very well take the spread premium and think, well, if I can close the spread premium, I multiply that by the effective duration of the instrument. That's how much the instrument could trade up. There's an opportunity there if these things get rated properly. Now, let's look at this same capital structure if you're a Bitcoin maxi, a maximalist. If you think Bitcoin's going up 30% a year,
this is my category.
Look at the BTC risk. It's 0, 0, 0, 0, 0, 0, 1%, 1%, 1%.
Next cycle.
And then the BTC credit spread or credit rating, it looks like 1 bip, 2 bips, 8 bips, 14, 13, 13. So this has a profound impact on your view of the preferred stocks, right? All of a sudden, the preferred stocks are looking like they're trading at a 600% spread premium because they're not that risky for a Bitcoin believer.
It's gone.
They're just trading at a massive credit spread. You know, maybe even more so for the convertible bonds, right? Now you're seeing 1,000 basis point spread premiums over what you might expect to be the risk.
The market isn't getting it.
This is an interesting opportunity.
The broader market's down.
For all sorts of investors, right? For equity investors, for fixed income investors, et cetera. Let's take this a little bit further. Next slide. This shows you BTC credit values across various classes of investors. So you see, if you're a skeptic, you might think that the right BTC credit rating for the convert coming due 2032 is 238 basis points. But if you think the Bitcoin is going to perform like the S&P index, it becomes 100 basis points. If you're an investor and you think it's like a big tech stock, it becomes 40 basis points. And if you're a maximalist, it becomes 14. So you can see the credit risk and your view of the credit is very much a function of your view of Bitcoin. And the differences with the preferred stocks are equally strong. I've got the market credit spread. And then on the right, I've got a fascinating metric, BTC credit hurdle. We're going to make this very simple, right? Which is how fast or how much does BTC have to go up in value each year over the next decade for this credit instrument to be deemed investment grade? Like, what's it take for it to have a credit of less than 100 basis points a year to offset the risk? And what you can see is for 4 of the 6 converts, Bitcoin could decrease and it would still be investment grade by our BTC credit standards. And you can see that the 31 to 32, they would require just BTC to go up 10% a year and they should be investment grade. And you can see that if you believe Bitcoin's going up about 16% a year, then the preferreds are investment grade. And so it's a very, very interesting way to see the world when you acknowledge that BTC is collateral. Let's go to the next slide. Here's a nice graph. What you can see that as you move from skeptic to trader, all of these credit calculations, they fall below the junk grade threshold.
That is crazy.
Junk is 380 basis points right now. That's the index.
That is such a beautiful
And of course, once you
slide.
get to like investor class, they're all looking investor grade, right? And so this is a view of BTC credit that you can use. Let's go to the next slide. Here we calculated BTC credit across volatility. So Bitcoin is traded with a volatility between 40 and 80 over the last 5 years. Recently, it's been in the 40 to 60 range. And so the real question is, at what point do these things not become investment grade if I'm a Bitcoin maximalist? Right? You could see like around 60%, 65 vol. And what point do they become junk? Well, they almost don't become junk, right? Next slide.
It's fucking crazy. I don't even know what to post.
The story is very different for the skeptic, right? If you're a skeptic, you know, they stop being investment grade, you know, when Bitcoin is more than 40 vol. And you can see they all, you know, cross junk around 50. So what you expect for volatility matters and what you expect for BTC ARR matters. But we think that that these credit models are elucidating, especially for the crypto community.
Do you?
And for the world's full of fixed income investors that like Bitcoin. And so if you're a Bitcoin maximalist or you're a Bitcoin enthusiast, but you run a fixed income fund, a preferred stock fund, a convertible bond fund, or a hedge fund, this all of a sudden starts to really make a difference to your thinking. Shall we go to the next slide? Here's the traditional credit ratings, and we're not credit rated. So I mentioned, you know, one of our interests is to get credit rating agencies to cover and to start to rate this credit. But you can see if you thought the BTC credit was 50 to 100 basis points, you you could make a reasonable argument that this ought to be an AA rated instrument, or some of them could be AAA rated instruments. And of course, what you can see right now is that the market treats them as less than CCC. They're just distressed debt. And so this is a massive opportunity. Next.
This is crazy. Every time I think he can't present it in a more clear fashion.
There are two ways to see the world.
A more sophisticated
if you think about
view
credit
about what he's
ratings,
building.
most credit ratings are created for companies that borrowed money that they don't have. And so a company needs $1 billion. They don't have the billion. They borrow $1 billion and they promise to pay it back by creating a future expectation of cash flows. And they say, we're going to generate $250 million of cash flow each year. EBITDA multiples 4. And so the credit rating agency is literally handicapping the future expectation of cash flows, and they're greenlighting the lending of money to a borrower that doesn't have the money. There's another way to see the world, which is
so crazy.
A company on the Bitcoin standard. We already have the money. We have $50 billion of money we could liquidate tomorrow if we needed to. And we want to borrow $10 billion. And so if I have $5 for every dollar I want to borrow, I've already got the money. So the credit
it's way more over-collateralized than a bank.
Isn't really a question of evaluating whether or not you'll generate the money in the future. It's really just evaluating whether you're going to lose the money you already have. And so there's a perverse irony here, which is that all of the credit instruments that MSTR has issued are over-collateralized by 5 to 1 or more. There isn't a single investment-grade company in the United States that is over-collateralized by even 3 to 1. That is to say, our company has better collateral, and
yes.
our collateral position is stronger than any borrower that is rated by any credit agency in the United States.
Fucking
in fact,
insane.
Super investment grade might have 2 times
That's the
or
line.
2 to 3 times collateral coverage. But there's definitely a disruption coming in this market. You know, there's a reason that all the borrowers don't have collateral. It's because either their Treasury asset is short-dated sovereign debt. And of course, the yield on short-dated sovereign debt is much less than the cost of capital to borrow, so it makes no sense to hold that as collateral, right? Or their Treasury asset is Bitcoin, in which case it totally makes sense to hold as collateral. But unless you're on the Bitcoin standard, you won't have any collateral, and you can't tap the credit markets being over-collateralized. So what we're really engaged in here is introducing the idea of BTC as collateral and collateral-backed lending. The idea of loaning money to someone that has collateral makes all the sense in the world if you're loaning to an individual or you're loaning to an institution. But it happens all the time. If you're JP Morgan or Citi and someone's got a large stock portfolio, you would loan to them based on that collateral. But it almost never happens with publicly traded companies, because publicly traded companies don't hold security portfolios, and they don't hold them because of securities laws that prevent them from capitalizing on securities. So we are driving a new way to see the world. What happens if there's a bunch of public companies that have a bunch of collateral that's appreciating faster than the cost of capital, and they want to borrow against it? In theory, it all ought to become investment grade if you're properly collateralized at the right vol and the right BTC rating. In practice, none of it is right now. This is a campaign of awareness that we'll be waging over time. Next slide.
Wow.
This is a great chart. You wonder about upside and downside. Well, when you buy our equity, you're getting 40% of the upside, 40% of the downside, 80% of the upside, 80% of the downside. It's just linear risk, upside, downside. And we've drawn that line. We've also calculated the delta and the downside of all of our convertible bonds and of Strike. And what you can see right here is a lot of the converts, the 31, 32, 28, and 30A, they're high delta instruments. They're giving you 80 to 100% of the upside of the MSTR common, but they're giving you less than that much downside. If you look at the 2030 convert for a simple example, you're getting 75% of the upside and 15% of the downside, right? If you look at the 29 convert, this is a fascinating one. It's about 60 delta. You're getting 60% of the upside and it trades below par, no downside, right? Unless the company defaults, you're going to get paid par. So it's got negative downside. You're getting a guaranteed yield to maturity and you're getting a 60 delta instrument. If you look at Strike is trading below par. So below the liquidation preference, below par, but with something like a 35 delta. So if you're an equity investor, these are all very compelling. You can construct a portfolio that's 100% upside, 50% downside, or 100% upside, 60% downside, or 100% upside, 25% downside. They're very interesting opportunities. Right now, the market is very inefficient, and the pricing of these is very inefficient because the market doesn't recognize BTC credit. There are a number of reasons why I'll get to in a second, but I invite all of you to think about these instruments because they're opportunities. Next.
Fucking A, man.
So key takeaways of fixed income. The credit markets are grounded in traditional finance practices and metrics. They have not yet embraced BTC as collateral. They have not adopted real-time risk management practices for BTC. You can calculate BTC risk, BTC credit every second, as the price of Bitcoin changes, as the BTC rating changes, as the volatility changes. You can update it every day as the duration of the credit instruments shrinks, right? So traditional credit ratings are issued by an analyst once a year, and they go stale, and they're opaque. And you can now create very transparent crypto credit metrics. The market's not there yet, but this is an opportunity. The reason the credit instruments trade with such wide credit spreads is because the markets are traditional. Most of our MSTR convert investors, they're arbitrageurs. They're not Bitcoin investors. They're not equity investors. They're not bond investors. Basically, they're buying $100 million of the bond, shorting $80 million of the stock. And so they're not bringing $100 million of capital to the bond. They're bringing much less capital. That's one of the reasons I believe that the bonds are valued the way they are valued. If we have long Bitcoin investors, long MSTR investors, or long fixed income investors or credit investors start to enter this space, then I think we're going to see those credit spreads and those spread premiums compress. The OTC market is one of the culprits. It's very inefficient. It's constrained. There are 144A regulations. And you have to be a qualified institutional buyer, and that means most retail and a lot of investors, they can't buy these, or it's a pain to buy them. And so that impairs the bond value, that impairs the liquidity as well, and that creates much wider credit spreads. Now, I've laid out these BTC models, and so I believe that there are strong reasons to treat MSTR fixed income securities as investment grade, even though the market assigns credit spreads comparable to distressed debt. I think if you think about it, if people agree with me, if they agree with us and they like Bitcoin, they'll start to view Bitcoin not as a speculative asset, but as a safe haven asset, and they'll start to view these instruments not as distressed debt, but as investment grade debt. And so as the perceptions of BTC evolve from speculative asset to safe haven, which is massive discussion in the community all the time, it's reasonable to expect major credit rating agencies to begin rating the MSTR credit instruments. Just like we expect banks to embrace Bitcoin, just like we expect insurance companies to embrace, just like the US government, the state, the local, the city governments are embracing Bitcoin. the credit rating industry is going to embrace Bitcoin. It's just a question of when, which we can't be sure of. MSTR has the potential to issue investment-grade fixed income securities, and we could emerge as the world's first investment-grade Bitcoin Treasury company. I think this is a great opportunity for us. I don't think it's appreciated, but what happens if we get an investment grade? What happens if we're able to get our credit instruments rated? There will be new pools of capital, will be incorporated in new indexes, new classes of investors will be able to buy these things. That capital will flow into our securities, then into Bitcoin. It will be beneficial to BTC, to MSTR, to all of our fixed income and credit securities, and it'll be beneficial to all the investors. Why? Because if you're an investor that appreciates the value of Bitcoin, then those securities we're selling will offer a superior yield and better performance. I think we showed you our convertible bonds are outperforming the other converts. They're outperforming the junk bonds. They're outperforming investment grade bonds. Our preferreds are outperforming other preferreds. It's not complicated. If you pay higher yield or give higher performance, and if you can show people that you have comparable credit risk or lower credit risk, then you're going to create demand for capital, right? So if you believe in Bitcoin, if you're a Bitcoin maxi, then those securities do offer superior yield and superior performance, and they do offer substantially lower credit risk in your point of view because you believe Bitcoin is good collateral. And so that's it's a very important message. It's an important opportunity for us. So on the next slide, I've taken up a lot of your time today. I appreciate it. I appreciate all of your attention, and pretty much nearing the end here, and I'll end with a call to action for all of you and for every interested investor, potential investor, anyone that's interested in Bitcoin or MSTR, or if you simply, are an interested investor in making the right decision. What would I suggest? I think our investors should contact Moody's, S&P, and Fitch. If you own our equity, if you own our debt, if you own our preferreds, you should call these credit rating agencies or any other credit rating agency, talk to your representative, and request that they begin to cover and rate these instruments. Everybody will benefit. When I say everybody, I mean the entire 400 million people that like crypto, everyone that owns Bitcoin, everyone that owns MSTR, all 55 million of our beneficiaries, everyone that owns the debt, the credit rating agencies will benefit, right? The fixed income investors will benefit, and the world will benefit, right? This is just a good thing for the world. It's inevitable that the credit rating industry should embrace Bitcoin and embrace this kind of lending. If you're an equity investor, I would suggest you consider, take a hard look at the MSTR convertible bonds and Strike. A lot of investors just have dismissed them out of hand because they're like, well, I just don't buy that. Or maybe they couldn't because it's over the counter, or maybe it's new or different, or they're just busy. But, if you're going to buy equity with 100% of the upside and 100% of the downside, it makes sense that you should consider an instrument that might give you 60% of the upside and 10% or 0% or 5% of the downside, right? If you deem yourself to be smart in portfolio construction, there's a lot of very interesting portfolios that can be constructed when the market misprices risk and misprices exposure. And I think the equity investors could benefit from this because, in my opinion, the fixed income instruments are undervalued relative to the equity right now. If you're a fixed income investor, you're a preferred stock or a corporate bond investor or a convert investor, I would say you should reconsider these instruments. Think about them again. Think about them in, along the lines of the BTC credit, the BTC risk we've laid out. Build your own models. one of our objectives is over time, we will go ahead and publish our BTC model to the world. We'll open source it. We'll make these things available. But the math here is not complicated. You could pretty much do a similar type of math that I've showed you using ChatGPT in deep research mode if you want to. Anybody with a Bloomberg can do it. Any qualified quant can do it. I would encourage you to do it and think about how you feel about these things. Because in my opinion, the actual credit spreads represent a substantial premium.
Yeah, I'll try.
Well, to the BTC credit rating, and I think the BTC credit ratings are a valid way to see the world and to see the risk. If you're a retail or non-QIB investor, well, you're locked out of the convert market because of 144A restrictions. I think you should consider BMAX. BMAX is a very innovative ETF that's constructed to provide convert exposure to investors that aren't able or unwilling to buy the underlying convert. So look at instruments like that because I think the convertible bonds, especially the short duration convertible bonds, they're treated like distressed debt, but they've got very high deltas. And then my ask of all investors, every MSTR watcher, every Bitcoiner is educate your peers on the opportunities presented by Bitcoin. Talk about Bitcoin, and then talk to them about BTC equity and BTC credit. They're sophisticated subjects, as you can tell by this elaborate mini tutorial I've given you. Most people don't understand them. But it's in your interest to educate other investors in the benefit of Bitcoin. It's in your interest to explain the nuances in the MSTR equity opportunity. And if you're holding our convertible bonds, if you're holding these preferreds, and you talk to someone that actually makes investment in fixed income, if you introduce them this opportunity, it's good for them. It's good for Bitcoin. It's good for the world. It's good for you. It's good for the common stock. There are no losers. So we're basically in education mode here. These aren't my opinions. I will note that you can form your own opinions, but I think there's plenty of reason to think that they're reasonable opinions. Shall we go to the last slide? I just want to end with our principles. We presented these October 30th last year, and they're just as valid today. Just remind everybody, our plan is buy and hold BTC indefinitely, prioritize the MSTR common stock, treat all investors with respect, consistency, and transparency, structure our company to outperform BTC. We're working to create more vol, more leverage than BTC. Keep acquiring Bitcoin, generate positive BTC yield. Do this as rapidly and responsibly as we can, subject to market dynamics, and they literally change every day. You know that. We will issue innovative securities backed by BTC from time to time if we think there's a market need for them. We'll think hard about it before we do it. When we do things, we try to make sure they're not just accretive, but they're also structurally, responsible and durable and scalable. We're going to protect the balance sheet. We want a pristine balance sheet. And finally, we're going to promote global adoption of BTC as a Treasury reserve asset.
Yeah, they are.
So with that, I want to thank you for your time. I really do appreciate it. I know this went long, but hopefully we gave you a lot of food for thought. For many of you, I'm looking forward to seeing you in Orlando next week. We're gonna go into deeper details, and I'm sure that there'll be a lot of questions, and we're going to answer a lot of questions, and we're going to have a lot of other Bitcoin treasury companies there, and we will continue with our strategy to educate the market and build a very healthy BTC ecosystem for everyone involved. So thank you for your support, and wishing you the best.
Fuck. Are we done?
Thank you, Michael, for the very insightful.
I'm going to kill the end. Michael's done talking. It's only got a minute left. I don't even know where to start with this in regard to comments. I mean, he's talking about a maximalist believing in 30% ARR, compound annual growth rates, right? Averaged annualized returns. Over the last 5 years, Bitcoin's done roughly 55 to 58%. And you're going to get diminishing returns over time. But I think a 30%, 20% is like a really reasonable bearish case for what you think Bitcoin can do. So I can't fathom the fact that he literally I've never seen a company display this level of clarity on what they're trying to accomplish and what the numbers look like, along with pretty graphs letting you know what your risk to rewards are. Ever. I've never seen anything like this before, honestly. And everything just makes me want to FOMO in more. And I've already got $750,000 in this. And again, I'm all about managing risk to rewards across investments. So I don't recommend anybody go all in. But this is amazing, and it's exciting that they're requesting that people get them rated too, because again, the more clarity and visibility and transparency into what they're doing and different models that might be developed over time. Let me kill this. Somebody's trying to call me. Different models that could be. Wait 1 second. Now my phone's playing a video. Let me kill that. You could literally have quants and all these different companies around the world crunch the numbers and figure out if there's any potential errors or risks and point them out publicly. I have yet to see anybody do that. And I doubt they're going to be able to. Again, what do you say to this? When they provide you with everything, tell you their entire strategy, how they're planning on managing it, and then show you which instruments will most likely perform better under different circumstances based on math? I've just never seen anything like this. I'm actually looking forward to see what they update their dashboard to. I'm assuming that there's going to be some updates coming along with it. I don't know what more to say without going over all the slides. This is crazy. Let me pull this over real quick. I'll pull in some notes from Jeff Walton because he was talking about it. Josh appears to still be bearish. Josh is bearish, okay? Josh Mandel. And I'm not 100% clear. I think it's just more boomer shit. And I get it. He's older. You want to take less risk. I totally get it. But if you can protect yourself with an investment like Strike and still have like much greater downside risk with 60% of the upside, like Saylor was talking about, again, these are like no-brainers if you think that Bitcoin's going to perform well in the years ahead and you don't think it's just going to turn into a catastrophic failure. Right now, it looks like Bitcoin's at 96,250. It's dropping. The whole market's dropping, actually. Let me just show you this real quick. So don't just think this is MicroStrategy or this is Bitcoin that's going down because of what they're talking about. Literally after hours, we got Apple down over 4%, even with the $100 billion buyback. We've got Amazon down 2.29%. We got Tesla down almost 1%. Palantir's down. MicroStrategy. Everything is down. So just realize that in no way impacts what we're talking about here. But if we look, I agree with every post from Jeff. He said it's going to take the market years to comprehend this earnings call, and anyone listening to the earnings call right now is creating a continued educational moat because every time we find out something new, it looks like he did gravitate to the fact that they would support their NAV and seek to drive it up over time with intelligent leverage via Strike and Stripe, etc. So the fact that they're talking about supporting it is brilliant. And then again, why does MSTR trade at a multiple to BTC NAV? This is fucking insane. All of this is insane. I'm going to have to go through all of this again, probably multiple times while listening and conversing with other people to think through this and the ramifications of it and exactly how I want to position my portfolio going forward. But it's fucking crazy. The MicroStrategy ATM is necessary. It's capturing passive volume coming into MSTR. November run-up captured $17 billion of passive volume from QQQ and instantly turned it into permanent BTC capital. The SPY is 10x larger than QQQ. Something needs to be in place to capture that excess zombie volume. All of this is right. Jeff's actually pretty brilliant for such a young guy. Think about this, guys. Think about tens of billions of dollars in net profit, net income coming in this next quarter in Q2. That's probably what we're seeing. You're going to see net profits that rival some of the biggest fucking companies on this planet coming in to MicroStrategy in Q2. You could be bearish if you want to. Josh, if this all blew up in the bear, because you would have a blow off top first based upon what he's doing, just no matter what, based on the sheer amount of Bitcoin they're buying, what Planet's doing, Simler Scientific, and all of the others, you're going to see a blow off top. So if Josh were to be right, Josh Mandel were to be right, it would be in the bear that you would have this risk. It's not now. And I remember everybody in the last bear market saying, oh my God, if we get down to under this 15,000 or whatever, it's going to blow up. MicroStrategy is going to blow up. And Saylor laughed at them and said, guys, if it gets under 3,000, it won't blow up because I have assets in other places. I could literally liquidate what I have and still cover. And nobody got it back then. And the strategy now, I mean, it might not be clear because there's a lot going on here and you have to think about it for a while to fully understand it. But the strategy now is more defined and infinitely better than it was this last cycle at the bottom of the bear when we were in the 15,000s. This is fucking insane. And so Berto says Josh seems bearish because of the dilution from the common. I guess he doesn't like the overhang. But here's the thing, though. They're actually at 2x, they're de-risking with the dilution of the common, right? They're de-risking their Bitcoin portfolio. At 3x, they're de-risking it even more. At 4x, it's fucking insane. So I kind of disagree with Josh, even though he's brilliant and worked at... I'm sorry, his experience definitely outweighs mine. I don't know why. Because nothing I'm seeing tells me that there's anything wrong with it. And maybe, again, he liked my comment about interviewing the three people I was talking about, Michael Howell, him, and Michael Saylor. Maybe I'll get an opportunity to interview Josh. I don't know. I haven't even seen him. Has he done any with True North or any of these other guys? But I'd love to interview him and find out if he has specific reasons why he believes that this is going to be so problematic, because I'd love to hear them. That's the great thing about what Michael Saylor has done. He's literally given everybody on Earth the opportunity to call him out. Everyone. He's given all the fucking clarity you could possibly give. Anyone could run quants and algos and be like, this is fucked and here's why. So if you guys find those, if you guys find somebody telling us with clarity why this is going to not work out, I would love to hear it. I'd love to hear it. Enigma, Josh argues that he can de-risk himself as a common shareholder and move into spot BTC himself as he feels. Well, that's great. That's great for him. That's great for him. That's great for Josh. He'd rather MSTR stay leveraged. Okay. I don't know why. That still doesn't make sense to me. It doesn't make any sense to me. Saylor is carrying on Satoshi's mission. Yes, George, I really feel like, here's what I feel like. Satoshi created it, and now Michael Saylor is trying to fast forward the adoption of it and make it to where everybody on Earth has to have it, because there is no wait. There is no slowing down with this man. But no, so I'm excited. I've got a lot to think about and a lot to read through. Over and over and over again, and then probably a bunch of videos from True North here that I'm going to have to watch and see. Ben Workman doesn't usually say anything right away. He's kind of a slow stewer and thinker, and I love that about him, actually. So we'll see what he has to say too. But I'm gonna have to stew on this for a while. This is a lot. But all I can tell you is I'm coming out of this more fucking bullish than I've ever been, by far. So I'm very excited because I believe, again, 55% annual ARR CAGR. That's what we've had on average over the last 5 years, right? So I think we can do 30 over the next 5. I think we could at least do 20. So I'm in the trader, I'm in the investor maximalist territory. That's where I'm at in his equation. I'm in that territory because I can see this happening. Martin Pilda, Josh complains that Saylor planned 3 years of buying to 6 months and now does another ATM. I think main problem is credibility and trust. See, I actually think that's fucking brilliant because I want him to do it now. I want him to do it right fucking now because I don't know if we're going to have a halving event like we've had in the past before. So I wanted him to do that. I'm very happy that he did that in a short period of time. And I thought that was like common knowledge that people understood that he was going to be more aggressive than what he was originally planning for. I just thought that people got that. I guess maybe they didn't. Maybe Josh didn't. I don't know. And I like Josh. I just don't understand what he's talking about. I don't understand his reasoning right now. Yeah, I need to rewatch it too. Berto, I need to rewatch too. Scott King, love this call tonight. Best ever. Thank you, brother. Appreciate the extra effort today. All in. Thank you. Better now than 150K. Exactly, BD. I would rather have him do it fucking now. I want as much Bitcoin now. And then when we get to 150K, they're going to be so incredibly de-risked. And then when we like again, and then he can slow it, like do it fucking fast and furious now. And then feel free to slow down on the way up. And then as we drop hard, the harder we drop into the next bear, then start to speed it up again. This is riding waves, man. If you're a surfer, you're going to slow down when you get to the top, and then you're going to speed up on the way down, right? When you get near the bottom, you're going to be at your fastest amount of speed. It's the same fucking concept for how he should be acquiring Bitcoin, in my opinion. Ride the fucking waves, man. Anyway, I think I'm done. This was fun. It was fucking crazy. I really enjoyed it. I'm going to go back here, and we're going to play this one more time because I think it fucking deserves it. There is no second best. Love you, Michael Saylor, and appreciate everything that you're doing. Guys, I will see you tomorrow morning in the market open at 7 o'clock, probably a little bit earlier. Peace out, guys.
What do you do with the Bitcoin besides it just gather value?
Real estate developers in New York City, they're not buying the real estate because they want to live in it.
But like most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them core. We call them core. People that use fiat currency, we call them core. We call them core. We call them core. We call them core. There's a name for them. We call them core. We call them core. Okay? Right, like, the point is, if you have the superior asset, it's going up forevermore. Forever.
Right, but we can all look Bitcoin sort of as
forevermore. People that use fiat currency as a store of value, we call them core. We call them core. People that use fiat currency, we call them core. We call them core. We call them core. We call them core. There's a name for them. We call them core. We call them core. We call them core. We call them core.